Hey, yo, everybody, welcome, guys. We're going to start in 12 minutes here with Nic Chahine. Okay? Nic Chahine, the options expert here at Benzinga. So stick around, guys. 10 minutes. We'll start. Let us know in the chat where you're tuning in from, where you're tuning in from. And also let us know what you're trading in the chat. Okay, guys? We're going to start in about 10 minutes. How we doing? Ladies and gentlemen, welcome. Welcome, everybody. Folks on the YouTube chat, on the Zoom chat. We have an amazing session planned for you today. I'm going to be doing giveaway prizes for people that participate in today's session. So make sure to participate. Let me turn this down. So I'm going to be giving out some prizes, guys, for those that participate. All right. So make sure to participate, engage in the conversation that we'll be having here today with Nic. Nic Chahine. All right. A lot of you already know him from his newsletters. I do get this question a lot, so I'll just get this out of the way. Yes, he does have trade idea alerts, and it's in the description, and I'll go ahead and post it in the chat one time. Yes, Simon. Yeah, you can come back. I don't know if mobile, I don't know if, I mean, it should work on mobile, the Zoom call. Robert from Greenboro, what's up, man? Go ahead in the chat. Let me know when you guys are ready to start, when you guys, are good to go, and where you are tuning in from. Joshua from Baton Rouge, what's up, man? I'm a Tiger, so cool stuff, man. Stacy, Tampa, Florida. Madison, we have there's a lot of people from Florida on Benzinga, guys. Simon looking to short RL. Okay. What's up, John? How you doing? What's going on, John? Let me know. Drew from Denver, shout out to Drew. So yes, guys, so we do have a special session here planned for you today with Nic Chahine. So once he pops in here, we'll be able to get this going. So that's pretty much what we're waiting for, guys, pretty much for Nic to just pop in there and we can start the session, I believe. Oh, by the way, yes, and I do get this question as well. Nic's trades do have that 90% win rate. That is what you'll get on the newsletters. If you do have questions, if you're a little bit more active, he also has a chat room if you do want to ask questions. All the links, information, we'll post it there if you have questions. But without further ado here, bringing on here, lead options trader here from Benzinga, Nic Chahine. How are we doing, sir?
We're doing good. How about you?
It's an interesting day in the markets. What are your thoughts on that?
Sure, totally interesting. After a more interesting day yesterday. So yesterday was pretty wild. We saw the market start the day up 0.5% and then collapse 5% and then rally back 5% and then top at 0.5%. Small caps were up 2.5%. So today we gave back some. We even went green at one point. And the VIX went red at one point, but then we swooned into the close, which is normal, because I think there's a lot of edginess around what Powell is going to say, but it's more likely that the market, this is a guess, this is an assumption I made, that they want to just put it behind them. In other words, they want to rally regardless of what he says. They just want to know that he's not going to break the economy on purpose, and they'd be crazy to. And they just want this event out of the way. So that's what's going to happen, I think. But I have to be conscious of the fact that he could say something idiotic. Imagine that, a politician. And he could throw us into a tizzy. He did in 2018. Maybe he learned his lesson. Maybe he didn't.
Yeah, recently he's been, I mean, you give him how do you put him? A+, B+? How do you put him? Like recently, this year.
Recently, I was very upset one time when he, 3 meetings ago, I think, I was like upset with him. I was like, I can't believe he just said that. And then in hindsight, I was like, man, that was brilliant. So when he was announcing the taper, that was the big deal. Will he taper? Will he not? If you don't know what tapering is, the Fed, they cannot lend money to people. So what they can do is they can make money available in the country by putting it in the right hands. So they control overnight stuff. And so that usually deals with big banks, big money centers, that entities that are registered with the Fed. So anyway, they have been buying assets since 2018, which is when he he caused a crash in Christmas of 2018, and he started the QE. So now he has been tapering down those purchases, and they had announced. He said, "Well, I'm not going to announce the taper now, but it's going to end about middle of next year." That's what before he started tapering. He was like, "What do you mean? What? You just announced it because you told us when it was going to end, and then you didn't officially announce the taper." So that was kind of like a backhanded way of saying, "Yeah, I'm announcing it unofficially, but I'm not announcing it until I announce it," which was pretty ridiculous. But anyway, we're past that now. Now we're at the point. How many rate hikes is he going to do? I think they should do like no rate hikes, maybe one, maybe two, maybe just nominal because the market expects him to. But I think JP Morgan, maybe Jamie Dimon said that they should do 6 or 7. That's crazy. I think Goldman Sachs's assumption is 4. I think that's too much. I think he's not going to say anything about that. He's going to say the taper ends now, so cut it soon. And he probably, if I was him, I would say, okay, I'm going to start running off my balance sheet starting next month, which is the opposite of the taper. The taper is they stop buying stuff. So what happens when they buy stuff? Their money goes into the economy. Now they need to do the opposite. They start selling stuff so they can suck money out of the economy to the same people. So now they call it running off the balance sheet. So basically QT, quantitative tightening, is involved 2 ways. One, you raise rates to crimp the economy, or you sell assets to take cash out of the economy. So I don't know which he'll do first. If I was him, I would sell stuff first before raising rates. I told you that before. I mean, if he's trying to protect us, the consumer, from inflation, why make it more expensive for me to own my house if I'm in a mortgage rate? If I'm looking to buy a house, why not make less money available, make it harder for me to borrow than more expensive for me to borrow?
Yes, and before we do get all into the juicy part here, because I know you do have a lot of material for today here for the folks, Nic. So just for a recap, guys, here, right? We're going to be here with Nic Chahine. He's going to be going over a couple stocks, option trades, the options chain, all that stuff. But keep in mind, we'll be going over tickers at the end, right, Nic? So for any questions, all that, Nic is participate. Keep in mind, guys, I'll be giving out a prize for we'll be seeing Nic, all right, in the chat. Who's the people that participate the most, and we'll give them a prize, all right? And just email me after, and I think we're good to go. You ready for your presentation, Nic?
Yeah, I am.
Okay, guys, pay attention, pen and paper. This is
so I'm gonna steal the screen away from this lovely person, the warrior. Okay. Do we have a name for that person?
We can name her now, right now.
We can't use Xena. That's too obvious, right? No, wait. I used to watch a show like that. Wait, what's going on here? I'm sharing screen. That's weird. Hold on. Let me try this again. Stop the screen share. Yeah. Okay, that's much better. Screen 1. All right, there we go. The 100, the show The 100, you probably have seen it. That reminds me of it. The people that survived on Earth. Okay, so you're good with my screen. So what you're looking at is just a normal chart of something. What is that? Oh, Microsoft. After hours, they reported they're down 6%, 5%. Ridiculous. They grew sales. They grew earnings. They made progress last year. The CEO was upbeat. Stock down 5% because it's all about emotions and expectations. What's broken are the expectations, not the actual company. Okay. All right. So before I get into what we're talking about options, I want to know what kind of low level, what kind of audience we have. So please tell me that, give me your level, put a 1 in the chat room if you've never seen options and you'd like the very, very basic ABCs. Tell me. 1. Hey, Assad. Go. Okay. 6. Whoa, Christian, what are you doing here? 3. John, you said 1. Now it's 3. What's up with that? Okay, so we have 1s and 3s. All right, so I'll touch base on the for the 1s. We will define it from scratch, but we won't delve into it, and we'll see if we can jump into tickers and put them into use. Okay. All right, so regardless of however you trade, regardless of however you trade, there should be basics that cut across all styles. For example, no one should take a trade on a whim. It should be thought for, and you should look into it, set it up, trade it, and then set your way out of it, whether it plays out your way or not. So sometimes there's a whole bunch of homework and a whole bunch of setting alerts, and then you wait for the alerts, and then you take the trades however you trade. And then as soon as you take the trade, you set an exit point if things go bad and an exit point if things go well. I'm going to give you an example. So today we were in the live room. These are the windows that I share all day, by the way, with the chat room members. So in the morning, they said, okay, do we take a trade now? I was like, I'm waiting. So this was one of the windows I had this morning for us. So we kind of fell apart in the open, and then somewhere here, I said, all right, so we either wait for the breakout or we buy the dip and hope for the rally back. So I bought the dip, and we waited almost all day for this to play out. And then this played out. And then as soon as it broke above that, that was a different trade altogether. So if I bought the dip, I stayed in it. Somebody that missed buying the dip chased it from here on out. Either way, whether we bought calls, we bought stock, sold puts, it doesn't matter. We waited, we set our alerts, we had our plan. As soon as we jumped in, we knew when to get out. I exited early here because that was my target. I said the gap is closed. I'm not going to milk every penny out of this. I didn't catch the perfect top, but I exited based on my plan. So I had a reason to get in. I knew when to get out. Okay. Somebody else was trading Tesla. So I had Tesla lines for them. And this was the Tesla plan. Early in the day, they said, what do you do with Tesla? Tesla was here somewhere. I said, well, you can trade the range. You have a box, and this box wasn't there because that hadn't happened yet. And they wanted to short it. I was like, I can't short it here. So I put a plan. I said I would get long here with a tight stop. What does that mean? So if I'm trading the range, I expect them to swing back up to here. So I get long Tesla and I stop out if that bottom fails. So as soon as Tesla came down to here, I would have closed it. So I had a plan. So people should do the same, regardless of how you trade. 5 minutes, 1 month, it doesn't matter. The process is the same. You take a trade and you say, okay, I'm willing to take pain for this much money or for this much percent, or if I lose a level that negates the trade, I'm out. So we had a plan. So this person swung it to here. And then I said, if you're looking to chase Tesla or short it, you short it with a tight stop, or you wait for the breakout and you chase it. One person shorted it and stopped out here, and the other person bought the breakout and made money. So they had a plan and they stuck to it. So in your case, however you trade, you should be with purpose. You get in, you get out, based on parameters you set ahead of time. Otherwise, you're really winging it. And that's what amateurs do. It's okay, but don't expect great results. Ceci,
great question. She's just asking, what is a credit put spread? For those that are not familiar, Nick is the king of credit put spreads, right? Like this is.
I like them. I like them a lot, and I'll explain to you what they are in plain simple English in a little bit. They're basically, it's a bullish trade that does not need a rally to win. In fact, it leaves room for a drop, and you can still profit. You know, the bad thing about them is that the maximum amount of money you make is up front. But the good thing about it is that you have odds in your favor if you set it up like me, and you need nothing to happen to win. So CPS, credit put spread. You've also heard it called bull put spread. So we'll get to that in a second. But first things first, you need to know how to define your entry point, your risk, how to trade, the method. So whatever you do, you need to have a method. So first things first, you need a sticky on your desk saying, don't take trades without purpose. So if you don't have a reason, a thesis, you shouldn't take the trade. If you don't have a trigger on a chart, you shouldn't take the trade. One of these two has to happen. You need a reason. Otherwise, how do you know that the trade is still viable? If that reason goes away, you need to be out of the trade. So if you're just going long Microsoft just because you felt like it, how do you know that to unfeel like it? So you need tangible things to act on. Okay, so let's define risk. What's the first rule of taking risk? You need to know the size of the risk, right? So risk, the first part of risk is, if you define risk the way I'm going to define it right now, it makes it a lot easier to be successful, because it just breaks it up into two elements and it makes it so clear. It's like an aha moment. It was for me. So the first part of risk is, everybody will get it right. If I asked you to define risk, everybody will get it right. How much can I lose? What's the maximum damage? The consequence of if I get it wrong. Everybody gets that part right, but that's not the part you manage. Okay, because the other side of risk is, it's all good and dandy to know how much I can lose, but how about what are my odds? Okay, so what are my odds of winning or losing? That's pretty important, and that's the part I manage. So let me give you an idea. So let's say I decided to go long Microsoft on this dip. I go in and I risk 1,000 or 10,000, whatever it is. But what I don't consciously know is, what are my odds of winning? I mean, how do you quantify that number if you're just using stocks? It's hard. So you can do homework and say, chances are it's going to rally, but that's all you got. Chances are. Well, that's not a good odds maker thing. In options, the odds are a number off of a piece of paper, off of the screen. You can see it. And whether accurate or not, it's a gauge that repeats itself. So you can use it consistently in order to make consistent decisions based on the parameters in front of you. So what I'm saying is, okay, if the options chains that tell you that you have an 80% chance of success, even though in a real world it might not be perfectly 80, but at least it's the same 80 you use over and over and over again. So you develop a method. So what I'm saying is, this part, managing this part, is a cakewalk when you use options. So it becomes easy. And by the way, even if you don't trade options, if you use that for your odds maker, even trading regular stock, you just look at the options for the information. That's also a viable strategy. So I'm not here to convince everybody they need to use options. They're cool, they're fast, they're safer than stock, they're more risky than stock. It depends on how to use them. They have the propensity to be safer, or they can also hurt you really quickly. So how you use them makes all the difference. Okay, so back to defining risk. First, you don't take a trade without reason. So no trigger, no trade, or no thesis, no trade. And then you take the second part is, define risk well, define it properly. One, establish how much you want to lose and don't add to it. I want to spend a few minutes on that part. Don't add to it. So I want you to get out of the mindset. I want you to stop. Well, I would suggest that people should stop averaging down. Averaging down means you've got a problem on your hand. Otherwise, why you're averaging down? And now you're making it bigger. Not a smart thing to do. So you can average in. In this environment, markets are near all-time highs, believe it or not, and shaky grounds. Fed's going into a tightening cycle. We have reason to worry. Okay, World War III is almost upon us. Shortages everywhere. Zombies are near. No, I'm just kidding about the zombies part. But anyway, so it is difficult environment to be completely confident that upside is the right way to go. It is still possible, and I still say we still might make new all-time highs next month or the month after. But there's a reason to worry. So what do? I don't go all in. So averaging in, not averaging down. I'll give you a perfect example. So one of the things I watch for us is crypto. And I've been saying for a while that Bitcoin, the chief coin in charge, needed to hold 42 to 44,000. I said if it loses 42 or 44,000, it could go to the low 20s. Okay, so that raised eyebrows. I said, like, I'm a fan. I'm just waiting for it to get to 20s so I can load up. But so once it lost 39.6, because that was the benchmark that it flashed to us one day. I think that was it right there, somewhere right there. So here and here, you see that? So it's on its way. So now it's going to try to pop yesterday. I can't remember when it fell apart. I think it was yesterday. I had a plan all along the way. I knew I was going to buy some on the way down. And about 33,000 was a place where I was going to go in and nibble. So I nibbled on the coins I liked. So I liked SOL, I liked CRO. I even liked I don't like Ethereum, but I bought a little Ethereum because I'm going to need some to do a couple of transactions. They charge me Ethereum. So I'm averaging in, not down. It's not like I bought up at the top and I want to average down. I nibbled, I'm nibbling, I will nibble again. And when it hits my target or near my target, I will add in size to a full position and wait. So average in, not down. That's pretty important because then it gives you room to add and get to a better entry point without having to make your problem bigger. Super important. So now I gave you 3 little things that you can probably use as habits going forward that make you a more professional like trader. Not that you mean you make a living off of trading, but that's what professionals do. They have a system. If you don't have a system, make a checklist. Don't take a trade ever without going through the checklist. One, the 3 things I just mentioned: have a reason, define risk the way it belongs, and don't go all in. That's as simple as that. Okay, so those are the basics that I like to cover. And those work, by the way, regardless of however you trade. The futures traders do this instinctively because they're watching every tick. They have a system on their charts. They don't need to take notes because they're watching every tick. They get in, and almost every futures traders that I know, when they enter an order, they have 2 or 3 legs in it. In, out, and out. So they in with a stop loss and a trailing profits above. So they do that instinctively, but the rest should also follow same suit. So this is the scratch pad that I always use. All right, so now we can jump into options and demystify a few things. First things first, options are super dangerous. That's what you hear. I think it's false. They can be dangerous. It all depends on how you use them. This is E-Trade's practice account. I'm not recommending it. It's hit or miss. I mean, it's good presentation, but it has a lot of bugs. It used to be much, much better in the days when it was Flash. It was Trade Monster at the time, but this is a crap version of it. So anyway, it's gone through 2 or 3 owners since then. They've demolished it, but it's a good presentation software. Okay, so here we go. What are we looking at? Okay, we're looking at Twilio, a company that's been under fire for a while, a company whose P&L is unbelievably strong, and they lose a lot of money, but that's because they grow a lot. So their business is set in the right arena. Everything that is internet connectivity and disseminating information and whatever, staying in communication, they're involved in. So they're in the thick of things. Demand is good. The P&L is good. Growth is there. Profitability is not there, but that's fine for now. So it's not cheap. I'm going to say 20 price to sales, maybe 15, 18, something like that, which is not outrageous, but it's not dirt cheap. And they lose money, so there's no PE. Okay, so first of all, what are all these numbers, man? Okay, so let me take it out. Options are contracts. And just like any contract, it has terms. When you enter into contract, there are stipulations. So in this case, we have a few terms. I'm going to go through them. I'm going to try to speak as little Greek as possible. I may mention a few Greeks, but I'm not going to delve into them, which will be unusual for an options class. So in this case, I'm going to pick March. So everything you see here is a contract between a buyer and a seller. There's a put side. Don't get wrapped up over what's a put and what's a call. We'll get to it. There's a put side. Everything on this side are put contracts, and these are call contracts. And this one is March, so that's 3/18 is the expiration date. So 52 days on the clock. So the first term is duration. For that one, it's 52 days. I can pick one for this week. It'll be 3 days. It expires Friday at the bell. So we'll go back to March. So the first term is days, number of days. The second term in this contract is price. So I can pick whatever price I want, this one, and the price is right there. Whether I pick puts or calls, it doesn't matter. I have to pick price. Okay, that's the second term. The third term is quantity. So what's that contract all about? First of all, every contract here is about Twilio. It represents shares of Twilio. So the contract, any one of these represents 100 shares. That's the definition. One contract is 100 shares. So anything I do, puts, calls, doesn't matter. It represents 100 shares. Okay, so that is another term. So now we have duration, and we have price, and then we have quantity. Okay, and then the big mother load, which are odds, the odds maker. So I have plenty of columns here, although fewer than most people. I don't have bid and ask because I only deal with liquid stocks, and I only need the mark. The mark is the actual mid between bid and ask, the middle between bid and ask. They call it the mid or the mark. So that's what I expect I have to trade. The price of that option is between bid. So if I go to trade it, whatever that is, bid, ask, somewhere in the middle, it's going to fill. So I deal with liquid stocks, and that's what I usually get. Okay. Now, the idea is, I told you earlier, the decision on what are my odds of success is easy with options. That's because of this column right there called the delta. And it exists on both sides, the delta for the calls and the delta for the puts. Ignore the minus sign. So the delta is your odds maker. And let me see if I can explain it to you visually. Current price, at least as of the close, 185.9. So let's say 185, somewhere around here. That's the price of the stock. You can see the price, the color change. The delta is 0.5. The delta is 0.5 on both sides. That's because it's a 50-50 chance. The price is right here. The contract is right here. Just like buying shares, it can go up and could go down. Nobody has an advantage. The buyer and the seller are on equal footing. Okay. So how can I visualize how this changes? So I'm going to show more 20. I'm going to show more 40. Okay. So again, 185. So look, 0.5, the delta. If I go down, the further I go, the lower the number. So look at this number, tiny. So what this is saying, there's virtually no chance that price for this equity, Twilio, is going to be 105 in the next 52 days. That's what that thing is saying. So if we go to Twilio, go to weekly. So it's saying there's virtually no chance Twilio is going to be here in the next 52 days down here. That's what that thing is saying. If you look at it, very small delta. So anything below 0.1 is like 10% chance or less that this is going to happen. Okay. So again, at current price, it's 50-50. The further from current price I go, the less likely the scenario is going to play out, price coming to it. So if you were buying a put, you don't want to buy anything down here because you literally have the odds against you. You only have a very small chance of making it, so of price being here. So if I wanted to buy a call, conversely, I don't want to buy a call that has an extremely low delta. There's no chance. So the closer I come to current price, the higher the delta. Okay, so that's how I use the odds maker. So why is that important? Let's say I buy a put or I buy a call, or I sell a put or I sell a call. We're talking about buying. Let's say I buy a put or buy a call. Don't worry about what they do. I'll explain in a second. I want to pick a starting point for my trade. And let's say I like to pick 0.4 or 0.3 or 0.35, and I pick a 0.35 and I buy it, this one or this one, and then price moves and then time ticks, and then suddenly that 0.35 is 0.19. You know what? That's way too low for me. I got to get out. So now I have an action plan. If my delta, if my odds of success drop below my threshold, whatever that threshold is, you pick it. You develop your own style. Then you say you're out. Now you have a tangible thing that helps you manage your trades. All you have to do is go through your account and go, okay, I own this one. The delta is now way too low. I'm out. So that's the kind of ease you get from options from using the delta. And it's as simple as that. It's as simple as that. People overcomplicate it. They start going into gamma and vega and all of this. You can, but I promise you, you don't need to. And if you keep it simple, you will have more success. Now, the other stuff is cool and could be useful, but you better specialize in it. Like if you're hearing buzzwords that sound cool on CNBC and you join the website and you start using the information willy-nilly, you might get hurt, because I promise you, we don't know the whole story. I can guarantee you that. I know that somebody is pulling a fast one on me. I'm aware of it. Therefore, I'm less likely to make a mistake because I know I'm at a disadvantage. Wall Street cheats, and we have to play by their rules. When they cheat, we know it. So I say it, we are minnows swimming in a sea of sharks and whales. You better swim close to the rocks, otherwise you're going to get gobbled up. All right, so let's start defining stuff. All right, so what is a put and what is a call? First of all, I do not need to own shares to buy either a put or a call. That's the first fact. I don't need to own shares. Second fact, a put is not bearish and a call is not bullish. They both can be both. In fact, there's only one scenario where a put is bearish and one scenario where a call is bearish. Other than that, everything is bullish in my book, and let me talk you through it. Okay, so let's say I own shares of Twilio and I'm worried about them and I want to insure them for the next 52 days. And let's say my entry price is way below current price and I'm okay losing a little bit, but I want to stop the bleeding after a certain number. Let's say I'm okay losing until 160, but after 160, I want to be guaranteed to be out. So what do? I go out and buy a put. And if I have only 100 shares, I only need to buy one put. So it's costly because that's a fast moving stock. So in that case, it cost me $900 to buy this put because it's $9, but it's 100 shares. So you have to extrapolate the full amount. It's $935. Okay, so me, the buyer, now I can fall asleep go to sleep knowing that my family's wealth is protected. The stock can go to zero and I'm guaranteed a sale at 160. So 160, somebody's on the hook. That's the seller. So I'm the buyer, and there's a person or something, an entity on the other end, selling it, from basically giving me the guarantee. So let me walk you through the logic of why this is not bearish in either case. If I was totally bearish on the stock, I would get rid of it. But I like it. I want to keep it. I want to sleep tight knowing that I can keep it and not be open to losses. I'm willing to spend money to protect it. So if I hated my car, I'm not going to insure it. I'm going to sell it, right? Same concept. So what about the seller? The seller wants to buy it. In fact, they want to buy my own shares. So yeah, they're bullish too. They just want a lower price. Okay. So me, the buyer, I'm in control. I do not need to give them my shares. I don't have to. When you buy insurance, you're not forced to file a claim. You can file a claim any point in time in this case. Price does not have to be lower than 160, but it better be lower than 160. Otherwise, it says I'm an idiot. But you can exercise anytime you want, which would be ridiculous. I've never seen it happen, but you can. So I'm in control. Let's say price falls to 150. The seller of the put, who's on the hook to taking my shares, cannot call their broker and say, hey, give me those shares. They can't. I hold the cards. I bought it. It's up to me. to exercise on them or not. Okay, so that's a pretty important nuance. And by the way, I don't need to own puts. That's what I said earlier. I don't need to own shares in order to buy puts, right? That's what I said earlier, and that is the only way buying a put is bearish. So if I don't own shares, why the hell am I buying puts? Because I may be bearish the stock. So if I buy the put for $900, and then if I was right and stock falls, and let's say it falls $20, suddenly it's down here, that $900 will turn into one of these. Huge. I'll give you an example. The opposite example, yesterday, we caught a breakout in the SPX. So we had a trade going on, yesterday the stock market was down hideously, right? So on the breakout right here, I said, I'm going to take calls to fill the gap. And it was $2 for the contract. So that's $200. Where the stock market closed, that was like $4,800 at the end of the day from one $200 call. I booked it way before that, so I did not carry it through, but a few people did have it or had a call spread. So what it means is that the higher the price goes into a call or a put, and in this case, the lower the price falls into a put, it explodes in value, especially if there's time on the clock. So what I'm saying is if price falls $20 within the 52 period day, the value of this explodes. So what do I do then? I just sell it to close it. So if I paid $900 to open it and then the price collapses like I thought it would, then I have an asset that's worth $2,000 or $2,500, then I should sell it. And the difference will be my profit. That's why people like dealing with options. So for example, people who bought this put on yesterday made 30% today, 28%. The stock only fell 2%. So you can see how it can make you money, but it also can lose you quickly. So the people who bet the other way lost 25%. So you better be very purposeful buying stuff in options. That's how people blow up their accounts. They start buying left and right. And if you're not good with charts and you start buying stuff like Tesla and things like that, they're expensive. You just lose your money if you don't have a plan. Let's flip this on its upside down. So they say most options expire worthless. You've heard that, right? Most options expire worthless. So why on earth do I want to be buying them left and right? I want to look for opportunities to sell. And let me put it visually for you. If I had to guess where Twilio was going, I can say a few things. It's hard for me to say that it's going to be at 275 in a couple of months. It is possible, but it's hard for me to say with some certainty. But it's pretty good for me to say with some certainty, you know what? I doubt it's going to be at 80 in the next couple of months. I'm more certain of that. It's easier to pick where the stock is not going to go than to try to pinpoint where it is going to go, and then sell risk where it's not going to go. So let me show you what I do. Somebody said, what's a credit put spread? So first,
hey, Nick, really quick here, before we do get into all of that, we're getting a lot of questions here from the folks about the newsletter. So I'm just going to go over this really quick with them, guys. I'm posting the link in the chat. The option starter is one trade from Nick every 2 weeks. After you complete that checkout, it's going to auto refresh. It's going to take you to the options enhanced. That's one trade every week. And then once you complete that, it auto refreshes to the tier 3. That's the options ultimate. And that has 3 to 5 trade ideas or more a week from Nick and a lot of other bonus content. And if you guys do have questions about the chat room, I'll post my email for that. But feel free to pitch in there, Nick, with anything extra you want to add.
Okay, cool. Thanks for that, Rodrigo. I appreciate your help. Let's go through the example of selling a put so I can answer the question of a credit put spread from earlier. So let's say I like the stock at where it is, 185. I'd like to own shares, but I wish I had a bigger buffer. Like I'm worried about the next couple of weeks. I want to get long the stock, but man, I just can't trust these markets. So what I would do is I would go out and sell a put, and that would commit me to buying those shares. And for it, I collect the credit. There's no money that leaves my account right now. No money. In fact, I collect almost $700. So in essence, I'm on the hook for buying somebody's shares at 150. So the broker reserves some cash out of my account. It's a cash secured put. So they need to know that I can buy the shares. So they're saying, oh, you're going to lock up your capital. Well, it's going to lock up way less capital than actually buying shares, right? The alternative is me paying 100 times $185. So in this case, it reserves less cash than that. So what happens, the transaction is called a credit. It's credit. I collect money to open the trade. No money leaves my account. It's a collection, it goes into my account, cash. And it's not mine until the bet is off. How is the bet off? Time runs out. If time runs out and they don't give me shares, I keep my 700. I made money out of thin air. If it falls to 145, one day I may wake up owning shares. So as it falls into 145, this trade that I had initiated today, let's say that happens in 2 weeks, this trade would show tremendous losses because now, like I said, it would be like $1,600, $2,000. I don't know what it would be. Depends on time, how fast, and all of that, and the VIX and all of that. So it would show a lot of losses, and they would be called paper losses. The only way I actually, quote, realize those losses, book the loss, is if I panic and I buy it back. And I say, oh, crap, no, I don't want to buy shares. Let me buy my risk back. So I only collected 700 and now I have to pay 1,500 to buy it back. No, that's not what I would do. I said I'll own the shares. I will own the shares. So worst case scenario, let's say I wake up and then it's 145. I own shares. So it's not automatic. They may give them to me, depends on how much time is left on the clock. But one day I will own shares. And if I wake up owning the shares, not a big deal because I collected 7. So my break-even point is 143. So if I wake up owning the shares and the price is at 145 and I call my broker and say, sell my shares, I collect 145, I paid 150, but I collected 7. So now I'm up still a couple of bucks. So it's not the end of the world to be put shares. If you pick the right level, the right time I sell a put. Like now I'm selling a put after a crash, after a correction. So Twilio has already corrected 60%. And me, I'm leaving it room to break even down to another 20%. So it's not so crazy. It is doable that it can come down to here, 2019 levels and all of that. It is doable, but it's not that crazy. It's a reasonable way of getting long a stock and leaving some room for error. Okay, so that is selling a put. But you're saying, okay, I have a smaller account. I cannot commit to buying those shares. No problem. There's a solution for that. And the way it is you add another leg to it. So in this case, I'm using this as an example. By the way, this is not a trade recommendation. This is a visual representation of a trade setup, okay? This is a violent stock. Please know that. So in this case, I'm selling the same put, but I'm also buying one below it. So why would I do that? Because now I've limited my maximum loss. If price goes to 0, I'm on the hook, I'm off the hook. So I sold insurance to somebody, I bought insurance from somebody. The net effect is $1, I'm rounding. So in essence, I would collect $1 and risk 4. Pretty awesome statistic because 1 divided by 4 is 25% yield. So the equivalent would be for me to risk $400 to buy shares. Let's say I spend $400 to buy stock A. I would need it to rally 25% for it to deliver the same statistics as this one, but I need it to rally 25%. With this one, the stock can fall 20% and I can still pull off the 25% yield win. So I don't need anything to happen. In fact, the stock can unhappen and I can still win. So if the stock rallies, I win. If the stock stalls, I win. If the stock drops a little bit, I win. If the stock drops a lot of it through 150, then I may lose some money. So that right here is called a credit put spread. First of all, put, all these are puts. Spread, you're spreading the risk. You have one this way, one that way. Credit, because the net effect of these two, I'm selling this, I'm buying that. The one I sell is $7. The one I buy is $6. The net effect is still a credit. It's a negative number. It's a credit that goes into my account of $1. All of this here is 52 days. This again is not a trade recommendation. This is me representing the idea of what a credit put spread is and telling you why I like them. They're boring as can be. Boring is beautiful. If you can design dozens of trades for this style of trading, let's say you trade equities, I would overlay another style of trading, part of my trading strategy. So I don't have to completely do this and nothing but this, although that would be fine with me. But like if I trade stocks or options in other styles, I can just overlay another way of doing things. So for example, I'll give you another example. So let's go to the call side and then we'll marry the two examples. Let's go to the call side. So we defined the put. The put gives the buyer of the put the insurance. Remember, we used that 160. I said I pay $900 and $900 to buy that, and it insures my stock. So what about calls? What are they? So the buyer of the call, if I buy one call in Twilio or any other stock, I own the right, again, not the obligation. I'm in control. The buyer is always in control in options. When you sell something, you're immediately at the mercy of somebody else. The buyer owns the right, but not the obligation to buy shares. I don't have to own shares. That's how I get to buy shares, is I reserve my price. So why would I do that? Let's say today I want to buy the dip in Twilio because it's fallen so much. I go to buy shares, like, ooh, $185. Okay, so how can I do it for less? Okay, so I go and lock my price at 190. And for that, I pay a lot, but at least I'm in. So for $1,800, $1,900, I lock my price at 190 for 100 shares. Okay, so now, if the stock rallies, let's say the stock goes to 230, which is not that crazy. 230 is here. I'm in like Flynn at 190. I paid $20 for it, almost $19, but I'm in at 190. So let's just put that scenario. I buy the call tomorrow, stock market goes berserk. Powell says, what are you guys talking about? I'm not going to raise rates for another 600 years. And then the stock market goes ballistic. This call that cost me $19 turns into $3,000. So $1,900 turns into $3,000. Then I don't even need to buy the shares. I just turn around and sell the call I bought today. And I'll keep the profit, the difference in profits. So buying the call gives me the right, but not the obligation. Selling the call, now who sells the call? So before I get there, so that's a positive thing, right? So that's a bullish scenario. Okay, so selling a call, if I don't own shares, is bearish. In fact, I forbid you from doing it. Nobody should do it, because especially in this stock, you know that shorting stocks traditionally, how do you short stocks traditionally? You don't own shares of Twilio. You go out and you borrow shares of Twilio and you sell it. So if I go into my platform and I say, sell shares of Twilio, believe it or not, they will let me sell shares I don't own. That's insane. So, but I'm on the hook now. Why? Because in essence, I borrowed 100 shares from Bob and sold them. And I put the money in my bank. And then I expect Twilio to fall. And then I only need to return 100 shares. So I go buy them at the cheap level price and I returned 100 shares and therefore I booked profits. But then you get the apes from Reddit that take Twilio up 6,000% in 1 hour. I'm bankrupt because I'm losing money for as long as the stock is rallying. And you're saying, oh, put a stop loss. Yeah, good luck with that. You won't have shares to buy. There'll be no shares to buy. That's how short squeezes happen. They start outbidding themselves, buying begets buying, and it runs away from you. And then they liquidate your account and poof, you're gone. So please don't sell. Selling a call naked is the same thing, because to a degree, what I'm doing, if I do not own shares of Twilio and I'm selling a call, I am shorting the stock at that price. So if I do it here, okay, I'm giving myself some room. I'm still short above 220. So please don't do it. So who sells these calls? If I owned 100 shares of Twilio and I'm happy with them, I just want to create income out of them, put them to work. And I don't mind selling the shares at 220. What I do is I sell the call, collect $800, $900. The worst that can happen, they force me to sell them at 220 when I bought them at 190, sold to you. So make sure that that's a level that's appropriate for you. And that's called selling a covered call. Covered call. I call it synthetic dividends, because you're making the stock pay you dividends. And I can do this every week. Pick a level where I'm okay with. What are we here? Twilio 185. That can't be this week. What are we missing here? Okay, yeah, there we go. So for example, there are 3 days left on this week. If I own shares of Twilio, I can collect $125 to promise somebody that I'll sell them shares at 205. Now this stock moves fast. So don't say, oh, this will never happen. This stock moves real fast in both directions. So this is like the mother of all momentum stocks. So don't be too confident with it. Be humble. All right. So that is called a covered call. Okay. So now we defined a put, excuse me, a put and a call. I even defined what is a put spread and how I like to sell it to make money off of it, off of the price range. Remember the put spread. By the way, I can pick whatever time frame I want, and I don't have to leave it to expire. I like to close mine early. Yesterday, perfect examples. So I shared with you the breakout yesterday that happened in the S&P and how we played it, right? Unfortunately, one of us in the chat room, he literally reached out to me, said, I got too cocky today. He played the breakouts well, and then he shorted the market late in the day by selling a call spread, doing the opposite of that credit put spread. And it was 15 cents to close as a win. He did well. And then the last minute, the last burst blew him out. So he went from being almost at maximum gains to maximum loss on that one trade. Okay, so it happens. He had many winning trades during that day. But the point is, even if he's trading not intraday, if I get cheap premiums, if I sell risk, if I sell a put spread and I collect $1 like I showed you, and then the value of that drops to 15 cents, I would close it. Why leave risk open for this little money, especially if there's still like 30 days left on the clock? I've been trading long to see things just go, what just happened? And you go from having a great win on your hands to a stinker that you cannot forget about. So if I sell a spread and it drops in value in my favor and it becomes super cheap, just book it, close it. In fact, I think there are some people that do studies that mathematically can prove to you why it's better to close at 40% or whatever number they come up with. But the point is, don't try to milk every penny of every trade. Don't overstay your welcome. They can't take away from you smaller wins, but they can definitely blindside you and blow you out one day and set you back on all of them. Okay, rolling a position, we'll get to that in a second, but it basically says, okay, I have a problem on my hands and I just want more time to get out of it. Boy, I had the perfect example for you here. Yesterday, somebody was asking me if I would roll a position. They sold a put. I cannot remember the stock. Something in the 60s. What stock is in the 60s? That's pretty popular. If somebody can think about it, hit me with it while I continue talking. Man, that's going to nag at me now. Anyway. All right.
Yeah, and if you do want to share any trades from the newsletters with the folks here, just to show them a little bit like.
Okay, so today I did share Twilio. Today I shared Twilio, and I shared it late in the day on purpose, so nobody gets tempted to jump in the day before the Fed. Okay, so my thesis. So I did a 15-minute video, just maybe under 15 minutes, and I said, what I
That's
think
for
of the
every
world.
trade. That's for every trade that you do that.
Right. That's for every trade. So every trade is going to have a video. It's going to have a table of content with it. Excuse me. Let me see if I can bring it into view for us here. 1 second. Okay. 1 second. I'll show you exactly what the table looks like. So the video said basically what I just said. The company is good. It's on rails. They grow fast. They're not cheap. They have the price to sales. And then I said, the world is on shaky grounds right now. And the write-up looked like this. The table would show, okay, come on, where is it? All right. So debit call spread, that's, oh my God. Okay, give me a pen I can see. All right. So debit call is buying a call naked. I said, that is not for me. Those calls are super expensive. And one, like I showed you, 25% you lose overnight. That's not my style. I didn't even give them an option. The expiration date, I chose March, middle of March, which is the one we were looking at. Debit call spread is buying a call and selling a call above it. And I'll show you the picture of it. So basically I'm saying, if it rallies, I want to participate right away. I want to pay just under $2 for a chance to make just over $3. And all I need is a small rally. In this case, it is a small rally because that stock moves really, really fast. I either nail it or it fizzles. And I'm ready to pounce. I also said, hey, I don't mind buying shares at 130 and somebody will pay me $350 for that. Yep, I'll take it. Or I'll sell a put spread and collect less for a more moderate, long, boring long, 30% buffer from current price. The delta is low, it's 0.1, so it's all in my favor. If you can see that, the lower the better. We talked about delta in the beginning. So let me put this visual to you on paper here. So what I said is, I'm willing to buy shares here. Somebody, if they want to sell them to me. So selling a put naked meaning one put, just one leg, whether I want to own 1,000 shares or 100 shares. That's a naked put sale. It's cash secured, meaning I am obligated to buy shares at 130. Okay. And the delta is 0.11. So the buyer of the put has like a 10% chance, 11% chance that price is going to be in their favor down here. So I literally put the odds in my favor. That's what I like to do. I put the odds in my favor. That's current price. The stock price can fall all the way to here and I'd still be fine. In fact, I can be fine $3.50 lower. Okay, so somebody that has a smaller account or does not want to take such a risk altogether right now can do this. That's a credit put spread. That's that other thing here. Credit put spread, 130, 125, 75 cents. So if I did 10, that's $750. So I could, if somebody's more aggressive than me, I like boring, but if you want to move it up and collect $1, that's fine. So the premium after hour is kind of wonky, but so that is a credit put spread, bull put spread. Now, on the other side, if somebody wants to buy upside, I said, that's not for me. I am not about to buy a call for $2,000 in Twilio. I cannot stomach losing 28% on one small red tick. Not for me. So I said none. You saw it. I said, not for me. You can do it on your own time, not for me. And then the more moderate long, which most everybody can do, is to buy a call, spend that $1,900, but then sell a call and collect $1,600 or $1,700. So now I'm only spending, premiums are jumping. So $2, let's round it, $2. The maximum width of the spread is $5, 190 to 195. Oh, that's why. There we go. 195 to 200. So that's $1.85. So all I need is a small rally to go above 200, and I can turn this into $5. Now it's only worth $2. I'm rounding. So that's a debit call spread. Call, it's on this side. Spread, or two, one long, one short. Debit, I'm buying the more expensive one. So here, this one, I need a rally to win. I need a rally to win. So the other one, I do not need anything to win. I need nothing to happen to win. Okay, so you see the difference? All right, so let me share something else with you. What if somebody is really optimistic, Twilio? They can do both. They can sell the 130, 140, 135, 130 put. So I'm giving you a visual of it, okay? So look in the background. You see how I buy this, I spend money out of pocket. I spend money out of pocket. What was it? $2, 185. And I sell this. I collect money. So doing both is being really long Twilio. Why? Because I'm collecting money. That's bullish. I'm spending money. That's bullish. But now the out-of-pocket expense dropped from $2 to 1.2 because this is a credit. This is a debit. They wash each other out to a degree. And if Twilio rallies, I only paid $1.22 for that $2 wide spread. So that's having a lot of conviction, and I don't. So if I did, I would start with one or the other. So I would start with this today and see how it goes. And then if it drops a little bit, the next couple of days, and I still have the same conviction, I would add this one to it. So start small and adding to it would be well. So this is a setup I shared today. And I shared it late so people would not be tempted to jump in ahead of a binary event. What's a binary event? It's a coin flip. So I don't know what the Fed's going to do tomorrow and say, and I don't know how we're going to react to it. My guess, I told you, is that the market just wants the event out. They just want it out of the way and they want to rally. That's my gut. So.
Hey, Nick, really quick, want to give a shout out to KY Plum Boo Boo, Alp Sharad, Jay Mejia, and B Mindia, like 10 other people, folks. I can't get to all you guys, but shout out for joining here, the options newsletters here with Nic Chahine. Welcome to the family, boys. Well,
all right, cool. Pew, 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 pew. Cool. So eventually, I don't know how you're going to migrate them over, give them the opportunity. Will they have the opportunity to get into the chat room to take advantage of the interaction on a daily basis? So I'll leave that in your capable hands.
Yeah, if anybody has questions about the chat room, send me an email. I'll just post my contact in the chat.
Thank you for that, because there's a lot of, okay, so if you approach the membership of us as a trade alert, I think you're missing the point. Okay, I do share my trade setups with great detail, but I think that it's an education program. So I approach it from an education. I can't nail every entry. That's why I use credit spreads and such, because that gives me a little bit of leeway. But every video, I go through all of this in every video. So if you hear it and see it once or twice here and there, fine. But if you get hammered with it almost every day, and if you end up in the chat room, you can pop in and say, hey, Nick, I have a question about this or about that. I'm in there all day. These windows are open for you all day live. I share my desktop. Today at the peak was 255 people in the room at the same time. So that was pretty cool. That was a record. Okay, so this was a trade from start to finish. Thanks for suggesting that. But caveat, Twilio reports earnings early February. So I would probably want to exit that trade if possible before then, because it does move a lot. I remember, believe it or not, years ago, I sold a $25 put in Twilio here, and I got hurt in earnings. It fell 25% because it lost a client. I don't know if it was Facebook or Twitter. It had one client that was 22% of its income, and headline came out and it fell. I eked out a big win because I had some protection in place, but I was lucky. $25. Look at that. You can even see where it was. So anyway, exit plan if the trade moves down. Yep. So good question. Thank you. Hello. Somebody's paying attention. So if I took the debit call spread, if I bought the upside potential and I spent $200, I should tell myself I'm willing to lose 100 or 80 or 50 or 150. Set a number that puts you out of the trade. That's an exit plan if things go bad, okay? Or if things go well and you gain 100 on a basis of 200 spent, then you should say, okay, I don't want to be a pig about it. I know I can eke out another 150 or whatever, but I'm going to go out now. That's what I did today. I had a win on my hand. I entered, by the way, did you know there's a ticker called XSP? That's a mini SPX. So if you like trading the SPX and you don't want to pay $1 zillion for every contract, there's a mini guy out there, XSP. So today I traded it in the chat room for us. I got an email from an CBOE person said, can you write more articles about the XSP? It doesn't get enough coverage. I said yes, and I never did. So I feel bad about it. So, but I do share it with my people. And yesterday and today I used the XSP. So I paid $1.50, or I can't remember what it was. The 443. Okay, now I do remember. Haha, 440. So I bought a call and I paid $1.50 for it. I believe it was the 442. And then price moved my way. And $1.54. And then price moved my way. And that $1.54 turned into 250, 248, 255. I said, you know what? I'm going to go into a presentation in a little bit or record a video about Twilio to share it with everybody. I'm not going to be able to babysit this one. So I booked it. And I left money on the table because it ran up to $3.70 or something. And then I said, okay, I missed out on a little bit of upside, but it was a good win. And look at it now, it would have been a loss. So you have to set exit points, good and bad. And I know that if I had lost half my money on that one, I would have gotten out. But I entered it with a trigger on the chart. So it was not likely that I was going to lose. I was solid with the levels. Okay. How do I determine an exit plan by percentage? So Chessie is, it's up to you, different people. So I'm a conservative guy when it comes to money. I'm aggressive in real life and really conservative with money. It's pretty funny because all my friends go, what happened to all this bravery?
Yeah, Nick is crazy.
So it's up to you. Some people set a percent. So you can tell yourself, if I'm down 20%, I'm out. Or you can tell yourself, if I'm down X dollars, I'm out. Or you can tell yourself, if the level on the chart that got me in is lost, I'm out. Let me see if I can use an example. Okay, maybe this one. So today, okay. So this is today. This is 5-minute chart, but it doesn't matter. I entered here. I drew this ahead of time and drew that ahead of time. I said, we're here. We're either going to break out or we're going to swoon and then try to swing back here and break out. And when it got down to here, I got long. So I would have said to myself, if we lose this low, then my thesis might be wrong. I'll try it again lower. I would have been out. Or I would have said, if we lose this low, then I have no faith in this market and then I'm out. So you have to set a level on the chart that gets you out, or loss amount of money, or loss percent of money. As far as booking, I had a target, and the target, I booked close to my target. I don't remember exactly whether here, I don't know if I did it here. I would have seen more profits. I'm going to say here. I booked here somewhere. Close enough to this, close enough to that, closing the gap. Knowing I needed to go record a video, I didn't have time to babysit it. And knowing that this can happen pretty quickly, I booked. So I had an exit plan that I didn't need to use, and I had an exit plan that I actually used. Okay. Okay. So I saw a ticker earlier. I wanted to address it. What was it? Anyway, so let's do a ticker. Hit me. I'm going to pick one of the ones that pop up. USO, no, short.
Yo, Nick, come on, man. Like...
No, I can't even. Oh, Microsoft. Yeah, Microsoft, I would. Okay, Microsoft is in the running. Square is in the running. Upstart is in the running. Okay, Microsoft, Square, or Upstart. Okay, let's go with Microsoft. Hot off the press. Okay, if somebody asked me to do a trade on Microsoft today, Hey, what do you think of the earnings, Nick? All right, first of all, the bulls are in charge of this chart. I don't care what's going on after hours. The bulls are 1000% in charge of this chart. There's no doubt about it. Okay. They reported earnings. I can say emphatically they crushed it. You're saying that they missed, and they didn't miss, first of all. And I don't give two rips about if they missed or didn't miss. The point of being a business is to grow your business, right? Year after year. So they reported earnings. They grew bottom line, the earnings, the bottom line, 22%, if I'm thinking correctly. That's when I checked it on Benzinga Pro. And they grew sales more than 20%, 20 point something percent over this time last year. And last year was strong. And so there are no holes. And the CEO was somewhat upbeat. So there are no holes, yet the stock falls 6%. That is a dip I'd buy. Now, the caveat is that it has to also function within the prism of the whole market. It doesn't trade in a vacuum. So if I zoom into a daily chart, now you see the weak points. But here's the thing. Is it here after hours? Did it recover all of its 5% and now it's green? Is it up 0.5% right now? It looks like. So I was right. Somebody said, how do you trade Microsoft after hours? I said, you buy the stock. And if you bought the stock, it was at 269, 268. No, not 268. I think the low was 269 overnight. So anyway, I said yesterday was a flash crash in the NASDAQ, 5% drop in the whole NASDAQ. That was freaking scary if you were watching it. And overnight, it dropped below that. So that is from, and the drop overnight closes the gap from last July. I don't need much more to say, okay, it's, first of all, here are facts. The quarter was strong. It may have disappointed some people, but those people need to realign their expectations. Another fact is that it has already lost so much weight. And unfortunately, also, it needs to trade within the market. So if the market continues falling, it puts downside pressure on that one. So this is a perfect example where I want to buy the dip, but how the hell do I do it safely? So this is the place where I say, I hope it opens down tomorrow morning. I hope it opens down tomorrow morning so I can sell puts against people who are panicking out of it. So this is Microsoft. Let's say it opens down tomorrow morning. I'm going to show more. Wouldn't you love to own it at 240? I would. 240 here. Somebody will pay me $500 to buy their shares here. Help me, get me out of my shares. This is a wrong place to panic. It's falling into a base. It's filled the gap. It can fall more, but I would love to own it down here. So I would sell a put knowing I could own it. Now, selling puts left and right when the markets are this shaky is pretty dangerous stuff. So I don't recommend people start selling left and right. It looks like awesome. And then you have a couple of weeks of selling market wide and suddenly you go, whoa, what happened to my portfolio? Now I need to cover margins and all of that. So really be picky with what you sell on which company. A way around it is to sell a put spread and catch the falling knife without much damage. So selling a put is one thing. Selling a put spread is another version of it. So in this case, I would sell one lower, not that one. I don't want to collect too much money. Why? Because if I collect too much money, it puts me in the line of fire. In this case, I think this not 125. This is like 0.9 in real life. If the markets were open, that quote would be a little bit lower, I'm guessing, because the delta is 0.15. It shouldn't pay $1.25. So we'll see what happens tomorrow. But that would be a viable trade right there. If I can collect $1.25, hell yeah, all day. I don't think I can. So that would be a somewhat boring trade. But if it opens down tomorrow, this trade setup will be much lower because price would be lower and I would still get $1, but at a lower price. You see what I mean? So I don't know where it's going to open tomorrow. Here's this another thing that we should talk about. Implied volatility. Super important, super important. I'll give you an idea. So this is the options chain for Microsoft today. This is implied volatility, a column we have not discussed yet. Implied volatility, it's on both sides. It's basically telling you how nervous markets are about this particular contract, not about the company, the contract, because it has an earnings event. So the implied volatility is extremely high for Microsoft. It's usually about 30. In fact, this platform used to show me, okay, so this is the implied volatility now. This is where it usually is. You can see it. The dotted line is where it usually is. See how if I go out in time, it's normal, but this week and next week, it's higher because of the earnings and Powell. So now markets are more nervous. What does that mean in real life? It means if I bought a call today for $1,000, that's how much it was at the close. If I bought a call for $1,000, I overpaid almost double, because normally this would be like 40. So everything above 40 is extra. So just tomorrow, if it opens flat, I lose half my money because of that. Because tomorrow this drops back to normal. What is normal? I don't know. Let me double check. 40, 50. So I went out a couple of weeks to see what's normal implied volatility. The further out you go, it should be the lower, slightly lower, 40, 50. Okay. So today it was 100. Tomorrow, this will be 50. So it'll just get whacked. So that's why you can't buy tomorrow's contract, this week's contract, if you want to bet on the reaction to the earnings. It'll be a waste of money. What you do is you buy it out in time and you sell one against it for this week, because that one dies twice as fast as the one you bought. So you do a spread that way, but that's called a calendar or a diagonal. Buy out in time, sell against it here. You have to be good at it. Don't start doing it willy-nilly. You have to know the levels and the strategy and all of that. Okay? So pay attention to what you buy. Somebody who's trading willy-nilly goes out and says, I think Microsoft is going to report good numbers. Let me buy a call. On so many levels. The earnings reaction has nothing to do with the quality of the earnings report. I promise you, I promise you, I promise you, that's a fact, a mathematical fact. It's all about emotions, expectations, a human element. That's mistake number one. And the second one is buying a naked put or a naked call to bet up or down using the current weeks. That's just insane. How do I neutralize that? I make it a spread. The easy spread is, okay, I think it's going to go up, so I buy something, but I also sell something. Why does that make it better? Because they're both expensive. They neutralize each other. It doesn't matter. The spread at current price is always half the width of the spread. So if I choose a $5 wide spread, it's going to be about $2.50. Whether I do it for this week, next week, or a month from now, it's going to be about $2.50. So that's how you can neutralize that effect. I buy something, I sell something. They're both expensive. Doesn't matter. This could be $1 billion. Doesn't matter. The same price, $2.50 for a $5 white spread. Okay, so now you're getting all kinds of different looks of options, and you're getting hopefully you're getting the idea of, hey, I better know what the hell I'm doing here. Otherwise, it's daunting. But I promise you, it's repetitive. In and out. Every trade is the same thing. And this is what happens. You develop a knack. You develop an affinity for one or two tickers, and you keep repeating the same stuff. I have people in my chat room that have been with me for years. They don't need my help anymore. And they do one thing and one thing only. I have one person who messaged me that they made, I forget the number now, I don't know, $210,000. They have a bigger account doing nothing but iron condors on the SPX. That's it. Iron condors on the SPX. And what an iron condor is, it's a self-leveled trade where it takes both bets. It bets long, it bets short, and if nothing happens, you win. And they loved specializing in one ticker. They used to do 100 different things, and they said, you know what? It's so frustrating. You buy something and then get a rally, and then it fizzles, and then headline breaks out. This way, but even last week, those things worked out to a degree. So an iron condor, since I mentioned it, I'll give you a visual of it, but this is not a trade recommendation. I'm just showing you a visual of it. So it involves 4 different legs. two opposing each other. So this one and that one. This is a visual of it. It's not an actual trade recommendation. Okay, so 265 are these two. Okay, this is definitely not a recommendation because that's way too aggressive. Okay, so what does this mean? It means I'm taking a bullish bet by selling a credit put spread like we talked with Twilio, a credit pull spread, also called bull put spread. This one needs the stock to stay above 270 to win, above 270 to win. This one needs the stock to stay below 302 and a half to win. I sell both. I collect a ton of money. And if nothing happens, I win. That's called an iron condor. Why would I want to do that? It balances itself. One day this is winning, one day this is winning, and also reduces the money at risk. Yes, I can lose going down or going up, but now I've reduced my money at risk. Why? Let's say I collect $1 from this. So then my maximum loss is $4, right? $5 minus the dollar I collected. Let's say I collect $1 from this. My maximum loss is $4 because it's $5 wide. But I can't lose on both ends. The stock price is not going to split in half on one run down, one run up. I either lose here or I either lose there, but I'm collecting $1 here and $1 there. So the maximum loss drops to $3 because I'm going to lose $5 if I'm wrong, up or down, but I'm collecting both sides. So that reduces the money at risk, increases the ways I can lose, not the odds of success, the ways I can lose. Each of those, I set mine to be 85% certainty on either side. This is not it. These are way too aggressive. Look, the delta is, I need the delta to be lower than this. So I may take it lower this way and raise this one to be a much higher delta. That's way too close. Okay. So visually, it looks pretty close, right? So that looks better. But still, iron condors, I would not collect more than $1 for taking an iron condor that's $5 wide. That puts you in the 90% odds of success, and you can still pull off a 25% yield on risk. And you need nothing to happen, absolutely nothing to happen. Okay, let's do another ticker. Hit me. Oh, Microsoft, we said Square. Square, good company, growth company, not cheap, great segment of financial technology, otherwise known as fintech, stuck in a loop with small caps, Cathy stock, whatever you want. They're hating the hell out of it. PayPal is stuck in the same way, almost. So I'm a fan of both of them. PayPal, I was happy it was going sideways for a little bit and then it broke. Now it's probably going to extend a little bit further. But I think it's too late to panic out of those. The easy drop has happened. It looks like Twilio, where it gave up most of the rally. I mean, crying out loud, this is the pandemic. So yes, it's still above the pandemic, but this is a phenomenal drop. I mean, that is a neck-breaking drop, 65%. You'd think the business is falling out of bed. Let's double check that. 850, 1.2, 1.7, 2.2. These are sales. 3.3, 4.7, 9.5, 16. Yeah, totally sucks. Yeah, this company doesn't know what they're doing. Facetiously speaking, of course, they're killing it. $4 billion in gross profits, half a billion, in net income now. Let's see the statistics on this one. 3.5 times sales. What? 3.5 times sales. That is dirt cheap for a growth company. Forget the PE. Who cares? At least they have a PE. But look at the growth. I mean, the growth is insane. So to punish it like that is ridiculous. Let me see here. Cash from operations is 400 million, 380 million. So they're not bleeding to exist. They fund themselves. Debt is rising. That's fine. As long as they don't go crazy. Profit margins are rising. So there is nothing wrong with the stock, with this company. The stock is broken because of how fast it rallied. So crazy apes paying the price. That's what it is. PayPal, PayPal is on surer footing from a P&L perspective. Also is shedding almost the entire rally. I would be long both of them here. Let's put it this way. This is not an obvious to panic out. The caveat is if the market drops further, yes, they can lose some more weight. But all by themselves, I would not panic out of them. I would be willing to sell puts to own shares. For example, I'll give you the ridiculous. Let's say I'm going on vacation for the rest of the year. Let's say I have to go visit my mom in Lebanon and take care of her, and I can't visit this company, but I want to be long the stock. So what do? I can go down to September and collect $1,000 to own it at $88. So Square, if I can do one trade and own it here and collect $1,000 for the opportunity to own it here, I would do that in a heartbeat. For me, if I wanted to own 100 shares, I would sell one. If I wanted to own 1,000 shares, I would sell 5 and leave room to add some more. Why? Because I'm averaging in, not down. Okay. Square, there was another one. What was it? If you hear me cough, I'm under the weather. Upstart. Okay, so Apple. Apple, you're just betting on the market. Upstart is the confusing part, right? It's like mystery. It's an incredible company to trade. I don't know if you're old enough to be trading a while back when we used to have Priceline. It was an incredible stock to trade, but it was manipulated. This feels the same way. It was totally manipulated. This feels the same way. Right now, Priceline is called Booking, BKNG. I don't trade it because it's just beyond crazy. So we went long. I shared it with the group here. My thesis back then, that was June, July area, was this is a crazy stock and it's stuck too flat for too long. I said, they don't stay that flat forever. And so we went long, and then this happened, and then this happened, and then we went long again the day before, spiked 17% recently. I don't know. So all along the way, they were saying, you want to get long, want to get long, want to get long. It's like, no. And then finally it filled the gap, and it came down on December 20th. Anyway, one of these days, it filled the gap. And I said, okay, finally I can get long again, because now it's back to the price where I went long before. So we went long. The next day it jumped 17%, and then a few percent of that. So they got 25% rally out of it. I hope they booked it. I don't send out saying, okay, I'm booking mine. Nope, that's up to you. I don't know your portfolio. You're a grown up. You can handle your own profits. So now I can get long again, but you have to know that it's a wild card. And especially that yesterday I missed it. It almost closed the gap down here. So this is where I don't know it well enough, like Microsoft, but on paper, the P&L is solid. The only problem is it's too new, and Wall Street doesn't know exactly what it is. But look at it, 2018, 100 million, 164, 233, 600, 2021. Trailing 12 months is really 2021 plus 1 month. So, and they're positive net income. Like what? That is pretty good. 14 times sales. That's not too crazy for a company that's growing. Let's go look at the overview. Are they bleeding cash? They are not. They have 15 million positive cash flow from their own operations. So they don't need to borrow in order to exist. The best example of this is Tesla. They used to bleed. To exist, they needed to borrow. Well, now they create like, what was it, 6 billion, 5.8 billion in own cash. So that's a good position. They're not bleeding. Debt to assets are going the right way. Profit margins going the right way. So the story is good. This is weird. That was weird. So I can't explain this. I can't explain that. Therefore, there's a giant question mark on it. So whatever I do has to be speculative. You know what? I don't know the options premium by heart. So let's look at it. When do they report? Soon. February, middle of February. So that's soon. I have to keep that in mind. I don't like to take risk through the earnings because the reaction is just garbage. It has nothing to do with quality of the report or anything. So I'm just guessing overnight. I'd like to avoid that drama. Luckily, it gives you a lot of room. Like, wouldn't you love to own it at 70 or 65? People will pay you hundreds of dollars to own their shares at 70. So somebody said Apple. One of my two easiest trades I've done in my entire life, one of them was Apple. Before the split, you remember the day when somebody said it's going to 11.11? Like that was like eons ago, before it split, like eons ago. And the stock collapsed 40% over time. People started making fun of it. I sold puts at $60 and collected $1 per contract for it. So if I did 10, I collected $1,000 to buy shares off of someone of Apple at $60. At the time, the balance sheet was still intact. It was still under not Tim Cook's balance sheet, which is full of debt. The old balance sheet had zero debt, and they had $40 out of that $60 in cash. So it's like me buying a house sight unseen that had just dropped from $130 down to 95 or 85 or something like that. And then somebody says, buy it from me at 60, and there's a safe inside the house that has 40% of its value in cash. Wouldn't you buy it? I would buy it like not even blinking. I don't care what shape it's in. So that was the easiest sale in the world. So in this case, I can't say it's that bulletproof, but that makes it easy for me to say, you know what? I would love to break even at 60 in this stock down here. So it's not too far from where it is. I mean, it's feasible that it could go there, and it's still a new stock. So there is risk involved. That's why I'm saying you have to be careful with a stock like that. It's untested. I mean, why would they sell it down this hard when it's got that good a P&L? Then again, why would they run it up that hard? 2021 was right here, and it's still way above that. So it's not a slam dunk buy and hold. You have to accept the risk that comes with it. You can buy calls with it, of course, but the calls are expensive. March calls are $1,600 a piece. But guess what? You risk $1,600 one time. So if I bought this one, and this week the market rallies, this 1,600 can turn into $3,000 just from one contract. But it could go the other way too, because this is a wild card. But if you do it after a drop this big, it'll be the opposite of chasing. Like, I would like to meet the person that bought it up here. What were you thinking? What were you thinking? I would never do that, ever. I could buy a breakout as an in and out trade, but as an investment, to buy a stock up here or even up here or even up here, to me is mind-boggling. But people do it, clearly. So don't know what that was all about. Don't know what this is all about. And just that creates a big question mark. And I cannot go out there and say, pound the table, okay, let's do a third one on Upstart. We did two great ones. I can get courageous with the third one, and I might. But I just want to know that the markets are okay, because this is not a core stock. This is a fringe stock. Apple is a core stock. Money hides in Apple during when what hits the fan. Okay. Would I do a spread on Upstart? I would specify credit put spread, debit call spread. I would do a spread, of course. Yes. And here's the thing. So I just said I'm iffy about the stock, right? So I also shared, okay, excuse me. If I wanted to sell a put to own shares, let's say I do want to sell a put to own shares. But you know what? I'm nervous about the market. So what can I do to make my trade a little bit more secure? I'll start with a credit put spread. I'm going to make one so I don't influence anybody. So I eventually want to have a position of being sold a put, so aggressively long the stock. But for the next couple of days, I'm not so sure. So I start with a spread, maybe this one, maybe that one. What does that mean? I sell the put, but I temporarily buy something. So let's say tomorrow passes and I'm comfortable with Mr. Powell not messing up everything, then I'll get rid of this one. I'll sell it. So I'll sell this, collect 470. I'll buy this, give back 250 tomorrow. I can sell it for 260, 3, whatever I get for it. And then now I'm long the stock by being short a naked put. But meanwhile, I had some protection for at least a day or two or a week or however long I want that protection on. So I start with a credit put spread. And then when I get comfortable with the market, it's like, okay, I see where we're going with this. I'm totally comfortable with Powell and whatever he's doing and jobs and all of that. Let me ditch my protection.
Right. And we do have a shout out here, a special shout out here for Jason Rasnick in the chat.
Oh, hey.
Thank you again for making me money by selling calls the past few weeks. Nick, just had to say that. Like everybody trade, like Nick is yeah, definitely we all trade with Nick.
So the story with Jason, I'll use Jason's case as an education piece here. So if I owned an asset, either a call, if I bought a call or shares, I can put my asset to work. So I cannot convince my family to do it. My brother, he has the personality where he cannot part with his stocks. So, but most logical people would say, you know what, I've got no problem getting rid of my stock at a profit. So if I'm okay with that purpose, and let's say I do want to commit to a stock, in this case Tesla, for a long term, why not put it to work? And if you're not actively trading, why not say, you know what, I don't want to look at my portfolio. I want to own the stock for a long time. So let me put it to work. So this is Tesla September contract. Tesla now is 918. Where was it at the high? Let's go here. And this is just an education piece. Thanks, Jason, for reminding me of that. So the highs were 1,200 and something, 1,240. So let's go to 1,500. I don't know what we're going to find. Let's go to 1,500. Ooh, sweet. Okay, so 1,500. Somebody will pay me $5,900 today if I would promise to give them my shares at 1,500 price. So what does that mean? I sell the call. It's called a covered call. I sell it, and money goes into my account. Time ticks, and between now and September, the worst thing that can happen is me being forced to sell my shares at $1,500 per share. 1,500. Meanwhile, I'm profiting from 918 all the way to 1,500. And then after that, I'm off the shares. They go, they might disappear. They call them away from me, that's what I call. They call the shares away. My break-even point, meaning I continue to profit $59 above that because I got paid for it, $5,900. So it's like me selling my shares at 1,550 or 1,560, really rounding, and then not participating. That's the worst case. I stop being long at 1,560. What? I mean, is that what? Who doesn't like that? So what Jason did, he did it more active. So he did it shorter term. So now he can repeat. If he can do it every month, every week, you pick a level. Of course, it won't be at the same level. So February, 24 days on the clock, somebody will pay you $300 for you to sell them your shares at 1,400. 1,400, it's 900 now. It's a no-brainer to me. Sold. Rinse, repeat, rinse, repeat, rinse, repeat. Before you know it, your entry price in that stock is much, much lower than you actually paid for it. Because every dime you collect here and it dies in your favor. How is that? Meaning Jason sold a call, time ticked, the price didn't get to it, and or they didn't call him away. So that call he sold, collected money for it, 2,400 or 2,800, it just died. Somebody paid $28 per contract and it just died. So the buyer lost their money. Jason now lowered his entry cost to the stock price by $28 because that's cash into his account. So if you keep an accounting of that, now you're like profitable at an incredible rate. You don't even need to buy protection anymore because you're in it at a lower base. So this is what options, little tricks and advantages. So if I own shares or calls, yes, I can do this against calls. So for example, if I bought a Tesla long dated call, say for August, it's expensive. Where are we at? 918. So the calls are expensive. They cost $173 per contract times 100. So that's a big chunk of change. However, it's way cheaper than buying shares, right? So what can I do? I can immediately turn around and start selling calls against them. So if this was today, my order would be like this: buy, sell. You've heard the term buy right, buy, right, and the right is WRITE. So you write in options. Writing options means selling options. You write contracts. You're a seller of contracts. You're a market maker. So I buy August call. I sell this week's call against it. And let's go see which one. I'm going to make this only 6 or maybe 10.
Really quick, Nick, here. We just got a big bump there on the viewers. So for those guys that are just joining in, Nick is going over the options chain, a couple educational things on options trading and that sort. So if you're just tuning in, that is what we're doing here. And yes, he does have trade ideas, newsletters. The links are in the description. We'll post them in the chat. But yeah, in case you're wondering and just popped in here.
Okay, cool. Thanks for that. So here's a visual. Buy right. Okay, so I bought this. Let's say I buy it today. I decide I want to be long Tesla for months. I buy this call. It's cost an arm and a leg. On a down day, that's not too bad. After a correction in the market, this is the harshest correction we've had in a long time. So it's a viable bet to make on a pretty fast-moving stock. And then I can immediately sell calls against it. And in this case, I'm going to bring it into view by choosing 965 or 970. So what does that mean? I bought something and I immediately wrote something against it. Buy right. So I'm long at 950 out in time. That's a call I own. I'm long at 950 out in time. I'm short at 970 this week. This is a viable trade setup. Now, don't do this if you haven't done that before, because it might be scary for a little bit. Now, look at what happened. The cost to get into this trade was $173 per contract. Well, because I did this, now it's $148, not 173. Why? Because I'm collecting $25 for that. So ideally, this is a bullish trade, by the way. Ideally, I want stock to rally, but not too fast. I want it to rally fast enough for it to not exceed 970 this week. 970, which is a tall order for Tesla, so I should really do it higher, but this is visual representation. So if indeed that's the case, if it rallies slowly, and next week it goes above 970, suddenly I own this one all by itself, because this one would die this week. In 3 days, this one is gone. If in 3 days Tesla is not above here, if it closes in 3 days at or below 970, this 25 will be chump change. So let's say on Friday, the price is like 950. This should be like $5. So I'll just pay $5 times 100. So $500 to take it off. Meanwhile, I collected 2,500. So I'm long this for $20 less. And I can repeat it as soon as this dies, or if it gets cheap, I'll quote, roll it, meaning buy it back and sell it a week out for more premium higher. I go a week out, more premium higher. Roll it, collect another. I'll move it up, collect another $3,000, and I keep doing this. Suddenly, you're long this call for nothing, for a lot less than what it actually is. So this is called a diagonal. I'm long a call out in time. I'm short a call shorter in time and a different level. So I jumped calendars and I moved levels, 950 to 995. That's called the diagonal. So if I had done 950 and 950, meaning I only jumped calendars, it's called a calendar. You've heard it called the poor man's covered call. That's an idiotic name. Poor man's covered call. Which is easier? Calendar spread. Poor man covered call spread, or calendar. This is a diagonal. Calendar, diagonal. Oh, and vertical. Same time frame, vertical spread. You jump calendars, becomes a calendar spread if you match up the same level, 950. If you don't, it's a diagonal spread.
And in the newsletters, Nick, but for the newsletters, right, for the trade ideas, the ones that were put in the link here that you send them weekly, those are for the majority credit put spreads, right?
Well, there are simpler strategies using a vertical spread, like a credit put spread and a debit call spread. So I shared an example earlier that people may have missed. This was a full example from Twilio. how I share a debit call spread. In this case, I said I would not do a naked call because the VIX is like 30. Who wants to buy naked legs at 30? I want to be a seller. This 130 here, that should not be 350, should be much less. But because the VIX is at 31, everything is expensive. So you want to be a seller of things. So debit call spread, credit put spread, naked sold put if I wanted to own shares. Look, only if I can own shares. I put the caveat. Here is the odds maker. I've got 89% odds on my favor, in my favor. The buffer from current price, the stock can fall 30% and I'm still okay. So everything I need to trade this is here, and with a video. So we did share the video, 15 minutes, 14 minutes, whatever it was, from start to finish with these visuals. Most often I offer these visuals. And of course the chart backup to it. With the Twilio, I believe I put a little box to show you where it is visually. Let me see here, one daily.
That's how I learned options, Nick, when going over the newsletters, because I know you put that like 15-minute video for all these trade ideas. So that's really how I started really understanding, having a better understanding of spreads, the strategies that you're pulling out, because you talk about the macro, the micro, the levels, the technicals, the price channels, risk management. So folks, I'm telling you that you're going to learn, like to the least you're going to learn, right? And also profit with Nick.
So here's the credit put spread compared to where price was today. And I put the benchmarks by the dip cluster from June 2020, 2019. I put reference points. But that's not right. One of these is wrong. So we'll double check. I think this is the cluster from the June. Yeah, June 2020. So that's wrong down there. Old cluster from April. This should be April. But anyway, I'll leave it there. It's a mistake. I'll live up to it. But that's where the risk is. That's where price is. I leave room for error because I don't know what this guy is going to say tomorrow and how people are going to react. So yeah, you get a whole bunch of stuff. If they end up eventually getting into the chat room, they have the resource of reaching out. And all of this is an incredible amount of learning on the fly and profits, profit potential. Like all day yesterday and today, I'm keeping this visual in front of us. What do I do on pops? Like if I get a relief pop in the last couple of days, in general, I should fix trades that broke last week. I should book profits if I took trades from Friday or yesterday at the close. I buy insurance if I need it. That's another thing. How many times have I said buy insurance, buy insurance? In November, I came out and did a few videos saying, here's how I protect my portfolio. If somebody listened, they bought the VIX at 17. It's at 31 right now. They're swimming in insurance right now. And they keep coming back and say, what do I do? Do I book it? It's like, well, you're not booking it. It's not profits. It's offsetting losses if you got somewhere else. So if you quote book it, you should, if you think you still have the same risk as before, you should re-engage differently going forward. So I think it's a pretty complete approach to sane ways of trading the markets. And I'm completely agnostic to the news. I don't watch news at all. Zero news. I have not watched it in all of last year. I had zero. And I want to say 1/3 of the year before that. I had a spat with CNBC people in Twitter, and one of them said, well, don't watch. I was like, okay. And I stopped. Happiest day of my life. So thank you, Judge, whatever his name is, Wapner. So that was the guy. Yeah. So,
well, I mean, the way that you trade, I mean, it's, there's just a high probability.
Well, I put the odds
success
in my favor, Rodrigo. You know, I put the odds in my favor. I put facts in front of me, like Microsoft, the perfect example. We were in the chat room watching it. They said, there goes Microsoft. It's down 6% after hours. Like, okay. So I said, I will reserve my judgment on Microsoft until I read the Benzinga Pro. So I went to Benzinga Pro, show me the news about it. And I pulled up the report. They usually have the, reddish color thing. I was like, I love that because they show the actual number of sales and earnings, and they show how it did relative to estimates, which I couldn't give two rips about that, and then how it did relative to the actuals from last year. That's what matters to me. if I open a company, don't tell me how you did relative to what your forecast said. Tell me how you did relative to what we did last year. Comps. That's what everybody lives and dies by, the comps. Are you growing or are you shrinking? So the reaction in the stock suggested they stunk. And I looked, and they're up 22% on the bottom line, 20% on the top line. And the CEO is optimistic about the next quarter. Like, what are you guys selling? Buy. So, and it's up 2% now. So I wasn't the only fool that saw that coming. Now, tomorrow, I want to guard you against the fact that it will swoon again, because often enough, when the stock opens and it has had a tough time pre-open, often enough to where it actually goes back down to revisit those lows. So what I would do tomorrow is I would put a 5-minute chart in front of me, and I will put a marker in. I'll do it right now because we're gonna be in the thick of it tomorrow. And it was 269 and 269. I know those numbers because I went and looked at them. That was the overnight earnings flush. That was the low from the overnight reaction after hours. Where did it go? 269. Oh, it's off the screen. Okay, so now I have a marker for it. So now I can manage my day tomorrow on it. So if it dips, and I think there's another level like 276, it exceeded the low from yesterday by a little bit, like 274 or whatever. So I will do this. I'll put one above here on the 274. I'm going to put a question mark because I need to go look up that value, and I don't want to hold you up. That's close enough. So those are my markers, and yesterday's low. So the yesterday's low, it's easy to set. It's right there. Crash. Now I have 3 markers on the down. So if we open and this stock throughout the day at some point, especially mid-morning, does this, I'm getting long, because that's just market makers retracing their steps during market hours. So if somebody did a deal after the market closed, that's the true up of it. I don't know how to explain it, but it happens so often that it's tradable. So I will be doing that. But yeah, we do homework, we use logic, we use facts. I don't use the news, although I am up to speed with what's going on, but I don't go to CNBC for them to tell me the opinions. Sometimes I go there to see Powell talk, because I'm not fast enough to go get to the Fed site. And sometimes I can't find the question and answer session on their Fed site. So I'm forced to open up CNBC just to watch the question and answer session. But I don't need to listen to Leisman to tell me what the Fed said. I'm hearing him. I don't need your opinion. So let me hear it from him, and I'll assess how that fits with my trading going forward. So if you're not good enough at doing that, I share my opinions. So then you can listen to them or not and develop your own. And I can promise you, not everybody agrees with me in my group. I have people that have been in there for years, and they have their own opinions and their own levels, and they share charts, and we usually come to the same conclusion. But there are some facts that are undeniable. This company factually grew. There's nothing wrong with it. It's falling from wherever it was because of price action. They rallied too much, and they're giving back some to find better footing. So weak hands, stronger hands. If it ever comes down to here, super strong hands. So then they'll be less likely to sell. Easy sellers, harder sellers, harder sellers. You know, the lower it goes, the more conviction the owners of that company have. Okay, so that's the kind of things that we do. It's an approach of traditional investing, trying to overlay some newer methods using options. And I'm not saying you should ditch how you trade. I'm saying you should complement how you currently trade and use options. It's new tools. Like if you were buy equity only, why would you not sell calls to create your own dividends? Not everybody can sell calls, but everybody should consider it. So that's my opinion on the matter. What else? Do we have time? I don't know where we're doing on time. What was the time for this thing? I know we're what is that? 2 hours already?
What was the time? Right now it's 6:50. I mean, we're always scheduled for 1 hour, but you're always so grateful with the members here. Y'all, so like, yeah, I mean, you are over, but you can be over if you want, so it's up to you. You're all
Okay, so we'll do a couple more tickers and then I'm out of time. I need to go do some other stuff for the members. So somebody's asking if this course is for beginners or not. If you're a beginner in options, I guarantee you're not going to find a cheaper introduction to options for. I do have beginner videos that are kind of evergreen, meaning they apply at every point in time on Benzinga. So you can go watch them at your own leisure. And the trades I share are basic enough, and I share enough information that if you do your homework and study the basics from the videos and come back, you can follow along. And if you don't, you miss this one, you get another one in a couple of weeks, and you get another one in a couple of weeks. And if you're an upper level person, you get 3 a week. So talk about 3 classes you can review at your own leisure at home. You don't have to take the trades. This is, if you look at it as a trade alert, I think you're missing the point. It's an education opportunity where you practice with fake money until you get comfortable going in and out and know what exactly you're doing. And then you start risking with a little bit of time. And then before you know it, you get comfortable to where you can increase to a size that is appropriate to you. If you end up in the chat room and you want to ask questions every day, all day, you got me all day, every day. I promise you, I'm sitting in my chair, answering questions day in, day out, day or night. If I have access to the internet and I see a question scroll through, they're going to get an answer. And during business, because during the market open hours, I'm sharing this, but this is only for the chat members. So that is a step above what you're doing. You're getting into the Benzinga family door, which, by the way, we've been working together since 2011. I don't remember what month in 2011, but I know it was back then. So we're doing good stuff. Otherwise, we won't be here. TTD. Okay. So TTD, I did have it here. Hold on. I'll pull it up. I had, there it is. There it is. So I'm going to teach you another lesson about charts. First of all, you know what's my best tool in charts? I'm going to pull this up. This is TTD. You know what? Let me take out all the markings. What is my best tool in charts? That's a workable chart for me. Can anybody guess?
What are you asking the folks here?
I'm asking them to guess what's my best tool, what's my best study on charts.
Okay, because I know
I'm
you have
showing them. I'm showing them the charts the chart that is in front. RSI. Okay, no, it's not even on the window, but that's a good tool if you know it. Specialize in it. Support resistance. Yes, Chessie. How would I know support resistance? You guys are on the right track. But what's the tool that gets me there? No, the tool that gets me there, you have it, they have it. I don't know what MDA is. Bollinger, no, that's a good tool. What is risk? No, you have the tool. Fib, no, it's on your face. Eyes, just look left. So find the levels that mattered. So for example, excuse me, this one is falling here. If I choose to get long here, I should first look left to see what happened the last time it was at this level. Okay. This way I can at least find the levels that have mattered in the past and then project that, hey, maybe they'll matter in the future. So for example, this level here has mattered for a long time. Back in July, they fought over it and lost for months. They came back and fought over it again. Boom, bounced off of it, bounced off of it, bounced off of it. They tried and fight it off in January on the 4th, and they gave it up. They tried one more push and failed. So that is a level I should note going forward. It's going to be a problem. Meanwhile, it was my hope, and then once it lost it, I used this pop to get out of a problem trade because I know they're going to face that same battle again, and odds are they're going to lose. So conversely, now it's falling into a bounce level that served this whole thing. So if I'm going long a stock that's falling into a bounce level that served for a pretty darn good rally, I can safely make the assumption that there's going to be buyers lurking down here. So if I went long, at least I had some thought into it, saying, okay, last time it was down below here, they had avid buyers. They bought it with ferocity and they didn't even look back. And this was May of 2021. So let me put my lines. This was important to hold. They fell below it. So now I have to pay attention on the way up. I don't want it to be like this guy. So now the bulls need to get back above 68 quickly. Otherwise, this will become a problem. And also, you need to pay attention to who's in control. I put these arrows to show they're selling rips. Every pop is being sold. Pop, sold, pop, sold. If it pops, are they going to sell it? So that's how they trap more bulls. This is it. We're going back to the highs. Nope. This is it. We're going back to the highs. Nope. So pay attention that it's what I call upticks mode. You cannot trust the upticks. The bears are in charge. They're selling lower lows, lower highs. How does that end? When you stop making lower lows, it's okay to continue make lower highs, but then the higher lows and the lower highs will come to blows, and then you snap out of it. Maybe not. So TTD, good company, I believe, good P&L. I have not looked recently. Yep, good strong P&L. So then this is where you delve into it and see, okay, it went from almost double in about 3 years worth of revenues. It's somewhat expensive from the price to sales. This is bizarre that it's not that expensive from the PE perspective, but it's expensive from the price to sales perspective. That's a little bit concerning, but not a problem. And they're profitable. So I don't care. The easy statement is there's nothing wrong fundamentally with this company. So clearly that's a broken stock, not a broken company. If I'm long and I didn't get out here, that's not a place to get out. That's a year's worth of data. Let me expand to 5 years worth of data. Now you see the potential downside. If the stock market corrects, whether it's a bargain or not, this one is going to have some downside pressure. But I can see where the break-even spots are. This is a solid floor. That was a big roof. So I am confident owning the shares if it falls in here. So the way I would trade this bad boy is I would go out and sell risk below here and keep repeating. Hopefully do it on bad days. And these were the lines that I had on the stock already. All right, one more ticker, and then I'll call it a day. AMD, fair enough. Oh, you said Uber. I'll do two. I'll do AMD and Uber, okay, but not as long. I would sell a put, Hassan, I would sell a put somewhere down there. Yes, not that particular one. I don't know. I haven't checked. So, but I would put it on my to-do list. So AMD, great company, great P&L, great leadership, too expensive, twice as cheap as Nvidia. So Nvidia is way more expensive. Intel's the bargain. And doesn't Intel report earnings soon? Yeah, tomorrow after the close. So this is where you got to say to yourself, okay, AMD is going to move in sympathy to Intel's earnings. This looks like a bargain, but if the stock market corrects, I think it could be much, much lower. Right in here, there's a lot of weak points. There's a lot of support here. This is a pretty, they should have held that. They didn't. They should have held that. They didn't. So they need to immediately jump back above these two, technically. Otherwise, and here's what could happen. They could bounce and come back. And if they lose this one, they will come down to here from a head and shoulders. It will just be a mechanical chart thing, not the company. So don't be upset that it could come down to 90. But if it does, this is where you start picking entry points. So I'm not rushing to buy AMD. But if the market rallies, it can rally too. But it's in the stratosphere right now. Somebody earlier said something about Ford. Same thing. Ford is way too high, way too expensive. In fact, I would short it, but I shouldn't. But I would if you force me. Uber. I used to be a proponent of Uber because the CEO used to talk, Dara Khosrowshahi, I think his last name is. He used to talk like he wanted to be Amazon. And now I haven't heard it as much. So I think Shopify is closer to an Amazon-like company than him. So maybe Square too. But anyway, be careful with Uber. This is a pivotal spot. So they fell into the hole, they came out of the hole, and then they rallied to the moon, and now they're back to the same spot. So this is where I'm going to introduce another tool that I use. It's called Volume Profile, and it's that area here. So this just tells me that people are interested in it here. So tool or not tool, this is where people are trading most. So I would imagine that it has people trying to fight for it here. Can it go lower? It can, but it would make a decent entry point. The P&L is not as exciting as it used to be. So I got long the stock when it came out in the 40s, and then I got mocked because clearly it went south. When it fell here, I sold puts at 16, not during the pandemic. Here, I sold puts at 16 when the stock was not 16, and then it did this, and I was super green, and then I got out before the pandemic. I don't remember when. So I have not re-entered it. I was planning on holding the shares forever, and I did not hold them forever. So it doesn't matter what I do with it. My opinion is that it had the opportunity to be an Amazon-like company, and I don't get the same vibes. I have better stocks to trade, but this is a decent spot to be long, but not all in. Okay. All right. I think I'm done for today. I have a couple of commitments. Unfortunately, I have to go get cracking on. Rodrigo,
right.
as always, you rock. I appreciate your help setting it all together.
No, you're good, Nick. Appreciate you, man. So really quick though, before you do head out, I know you have a lot to get to the chat room, but and all that stuff, the newsletter trades and setups. But can you leave us here with some closing remarks? I know a lot of people here already know you; they're already members. Some closing remarks on why they should join the newsletter or the chat room, or what you're looking forward to for this week.
To get to the chat room, you need to go through the newsletter. So that's why you need the education piece to get you get your head around the options conversation easier. The more you see of it, the easier it gets. It's repetitive, and the chat room is where all the money is made. So I cannot tell you how many people said, "Oh my God, I made more money in the chat room today than I would make in my regular job in a long time. Plus, I'm making fewer mistakes because I'm trading in a group." Because let's say you want to get on a trade, say, hey, what do you think of this? If I like it, I'll join you. So you're debating with literally hundreds of other traders in there. And you don't need to be all day in there. You pop in, you pop out. It's at your own pace. We're all day in there. You pop in whenever you want, you pop out, you're done. So it's like a classroom where you can pop in, hey, teach, what's going on? And you don't want to do what we're doing, get out. So you can pop in the next day. And the cost is minimal compared to what you can do with it. So get to the chat room through the newsletters, and you will level up your trading. I promise. I promise. In fact, you promise. You guys give them their money back.
Yeah, we do that. We actually do have a 14-day money back guarantee for the newsletters, 7-day for the chat room. But look, guys, I mean, I talk to people on the phones all day. The feedback's pretty clear. Trading with Nick, trading with someone that knows what they're doing is always helpful. But like Nick said, it's about trading in a community, in a group, and then you break it down. What kind of community? Is it like some Wall Street bets crazy with fake bots and spams? No, this is everybody's a real member, real traders trading with Nick. So
I'll tell you what happened in the chat room 2 days ago. That's yesterday, the incredible day where markets fell 5%. This is the IWM. That's the small caps. I erased my lines. We got long here. I kid you not. I drew an arrow up to here, and then there was a secondary and a tertiary explosion. 4 trades, I think 4, maybe 5. I did all but one were huge trades intraday. And these were fast trades, meaning I buy a call and I get a run and then I sell a call to book the profits. But that happens in the chat room. Maybe you can't do it right away, but if you catch one, it pays for the membership, then the whole year is bonus. And if one conversation saves you thousands from making a mistake, or if somebody's stuck, oh, I got exercised on, oh, my yesterday my credit put spread expired in the money. What do I do? I was like, you didn't have to do anything. He goes, I can't see it I'm waiting to get assigned shares and I don't see my shares. I was like, that's because they probably already liquidated the position for you for maximum loss without having to assign you. Oh, okay. So then he was okay about it. Anyway, so I appreciate the time. There are plenty of reasons. The main reason is education while the opportunity to profit. I mean, this stuff is not BS. I have 255 witnesses in there, and you could be one of them, and you'll see it happens every day. And today we waited half the day before anything developed. Okay. All right, I'm gonna bolt. Are you okay if I leave?
Yep. All right, Nick. Thanks a lot, man. I appreciate you.
All right, later, bye.
All right, folks. So questions about the subscription. I'm gonna go. I already see a couple questions out. I will announce the winner of the prize at the end once we're done with the questions. For those that are participating and asking questions, regardless about what it is, could be about subscription, that kind of stuff. Just the a participation award, pretty much. So yeah, I'm showing you guys on the screen the this is the options enhanced, right? So this is the general premium ideas portal, and I put my mouse over the options tab here. So you're going to get a few things here that I want to show you, right? So let's do it this way. So the link that you guys are seeing, right? Because there might be some confusion on the stuff. So the link that you guys are seeing in the chat that says like $7, that is the option starter. Okay. That is one trade. It's $7 a month. All right. It's literally cheaper than a burger or a coffee, really cheaper than Netflix. And it actually makes you productive, not the other way. So invest in your education, invest in trading with the community. Absolutely. So the link, guys, is $7 for the month. That's the starter. The starter is one trade idea every 2 weeks. Okay. And I'm going to highlight them here. So this is the starter, right? Once you complete that checkout for the $7, it'll like refresh pretty much like automatically once you complete that. And then it's going to ask you if you want to add the options enhanced for $14 a month. Once you just click the blue button, add, it's going to auto refresh again to the tier 3. The tier 3 is where Nick is talking about. Well, he does the same 3 to 5 pick. That's 3 to 5 picks a week, but he's also giving you bonus content, bonus material, bonus education, and all you guys will get access to this other page. Let me show you. It's called, it's just like getting started pretty much, right? So you guys are going to get all these videos, right? Trade setup information, what are options and puts, definitions and uses. This is practical, like real information that you can apply to learning how to trade options. I went through all of these videos and it really made a difference like a year ago, because these videos have been there for a while. So if you go in there, like you join $7 a month, you still have access to this library of resources that Nick has recorded for you guys, right? What is a spread? A lot of you guys are not familiar with spreads. This is where you can get that information. It's trusted information from Nick. It's not like you're reading this on Reddit or Wall Street Bets or none of that stuff. This is actually, done by Nick just for you guys as members, right? So what is a spread, call options, definitions, and uses? Like this is I think a better name for this is like, instead of getting started, like just a starter kit. It's like, it's everything you need before you start trading options. Like if you're ready and good to go and ready to start making those trades with options, then you do need, I really, really suggest, especially if you're new and you're starting to learn, make sure that you can understand the vocabulary, and the terminology of the things being discussed, so that you can have a better understanding of the trade and really know what you're doing, right? Credit put spreads, another video there. Table breakdown. So the breakdown is that's basically like Nick's notes on the trade. I think he showed you guys something like this, so that you can read the format, you understand the format. When and how, when to book or set stop loss, when and how to book profits, lesson breakout versus swing trade, what type of trade is best. I know a lot of you guys, maybe, I don't know, maybe you just buy calls and puts, right? But if you do, there are other ways that you can trade options, which are more conservative, and the probabilities of success, you can measure them a little bit with a closer approach. That's what Nick does. So you can see, he's going to show you which type of trade is best: covered call, or credit put spread, or a vertical, or a diagonal, or iron condor, or butterfly, or so many things out there. And it's really good to know all of them and how to use them and when to use them. And Nick is really good at that. So it's important to know that in options, you have different financial vehicles that you can use, right, for your goal, which is ultimately to make money in the markets, right? So yeah, even if the stocks are flat, even if it's flat, you can still make money with options. I know that if you just buy the stock and it's flat, I mean, you don't make or lose anything. But with options, you can make money when that happens, when that consolidation happens. Yeah, go ahead and post the questions, guys, in the chat if you have anything on the newsletters. Yeah, so these are some of the other videos, right? So back to the trade idea setup, right? So this is the options enhanced. This is the one that's after the starter. It's like 14 a month. So let's see, we got something here about Peloton and Snap. Yeah, so this seems like a good note on Peloton Snap and how to trade it. See, there's a link here. I don't know what this is, but I'm going to click it. Oh, there's a video. Okay. So yeah, you have a video there. That was the link for the video. Ceci asking, there is an education for options. Yes, guys, I think go ahead and make sure to ask the questions now. It's a lot easier for us to go through the questions together. It's better because other people might have those questions, and then we can answer everything, make sure that everybody's clear, everybody knows what they're getting and all that stuff. All right, and Ceci, you are the winner, so send me an email. All right, we're gonna send you. Well, I'm gonna send you the details on the email. You won the prize here for participating and everything when we mentioned at the beginning. So congrats to you, Ceci. I'll post my contact there. Send me an email. Let me know. I will hook you up like officially. So you definitely, good job with all that stuff, right? That's how you have to be. That's how you have to like want to learn. So that's great. Nick is definitely like a very smart person to trade with. So you can learn a lot, right? You can make whatever you want from it, right? You can just pop in there to get the trades, or you can actually let Nick mentor you, right? That's great. I mean, I wish a lot of people wish they had that when they started, but it's just something that until Benzinga came in and changed the game with this stuff, it was just you didn't have a lot of options really. Okay. So yeah, send me an email, Ceci, all right? And let me show you guys this. I'm going to show you the chat room really quick. There's actually going to be a big upgrade done. So it's not going to be like this for too long. It's the last one that needs to be upgraded. So yeah, it's gonna be different, but you can see right here where Nick is posting like nonstop every single day, like probably minutes apart, it's all day. It doesn't stop. He's there on Saturdays, Sundays. I mean, he doesn't have to be, right? He can take the day off if he wants. I mean, it's a weekend, he's not, he can be doing something else, but he's there in the chat room with you guys. He chooses to do that, right? To be there. There's a session on Sundays as well. He goes over like 150 tickers. But yeah, if you have questions on the chat, just email me as well. And all right, let's go with this question. Some questions here, guys. Brett, The chat comes with what tier and how much. Yeah, so I mean the chat, I'm gonna post the link one time, Red, on the, I'm gonna post it now for the chat, okay? Um, winner, yeah, I mean, I can definitely give you something like a special for that. Make sure to send me an email, or yeah, definitely send me an email, and I will definitely reach out. I don't know if to by today, because I do have pretty packed inbox right now, but I can definitely reach out tomorrow, right? Wednesday. Yeah. So yeah, just shoot me an email and I'll definitely get back with you there. All right. Any other questions, guys? Right now is the time before I do shut the stream here. We already have the winner. So go ahead and drop those questions if you do have that, okay? Right now is the time. We're here live doing Q&A, okay? Tazim asking if I join, okay, I'm planning to join. No, Nick is a separate deal, pretty much. So Nick is his own thing, standalone, separate. But if you do want to bundle something, I can be flexible with that and see, see what we can do, what I can do to help you out. Craig, sign up for what? For the newsletters? I think the link is in the it's in the chat right there. Just scroll up a bit. Let me put it up again. $7, all right? $7 a month for 2 trades a month from Nick. Okay, that's like $3 a trade. I mean, that is if you've been waiting to, take that step forward and start learning and trading at the same time and, making profits with it, this is probably the best time to do it. We've never done this before. We've never done monthlies. I don't know if we're ever going to do them again. I would just get in while you can, because for $7 a month, I can tell you, like, I don't even know what else is $7 a month. I don't even think Netflix that's like 10 now, right? So um, it's an insane deal. And then, so once you go through the starter, you're getting 2 trades from Nick a month, one every 2 weeks. Then after that, the enhanced is one every week if you do want to be a little bit more active. And then after that, you have the ultimate, which is 3 to 5 trade ideas a week. Plus, you have a lot of bonus content, education content. He's like regularly dropping education bombs like everywhere for the newsletters and everything. So that's good. Keep in mind, this is the different type of it. It's like the education that, like the practical education. It's not like the theory. It's not like the book. It's the actual, like, out in the field learning kind of thing. So some people learn better that way. I probably think, I do myself. So I mean, if you think that you learn better, if you're new with options, you want to, and you want to just go right at it to trade, I think this is number one. I mean, an insane deal. So yes, go ahead, do it. But then also that you're going to be learning as you are doing the trades. So the education is with the real, it's for the trades, right? So you connect those things, those things connect in your head and you're going to get it quicker, right? And then you can start building on other ideas and learning other things, right? That's how it works, right? You learn something and then, okay, you have that lockdown, and then you go to the next more advanced thing that, maybe for you, it's learning calls and then spreads and then verticals and so forth. And then as you learn all these things, you're going to be more, you're going to have a bigger arsenal of tools to trade and profit, right? You don't just have to sit out. You can own a stock and you can hedge and make money even if it goes down. Like, even though I own a firm and like I own stock, I also have, I've had puts on it too. So you can do a lot of things with, and it's been going down, but still, I'm averaging down and I'm making money with puts. So I think that with options, you can get pretty creative and you can do a lot of things with them. So it's really good to have them. It doesn't matter if you're using it to hedge or whatever, like to weather the storm, or, doing a spread like Nick does. He loves to do credit put spreads. All right, let's get some questions here, guys. If I join, okay, so we got your question, Tazim, right? They're separate things. Peter, what is included in the ultimate package? The ultimate, I think it's like 47 bucks. Total, you're spending like 70 a month and you're getting like 20 trades. So get this deal while it's there. It's not gonna be there for long. I think it expires at midnight, actually. Um, so Peter, what is included in the ultimate package? You're getting 3 to 5 plus, right? Trade ideas with all of them coming with a 15-minute video from Nic. And you're also going to get bonus content like education. He'll throw in, little lessons, many lessons here and there. So it's very interactive. Everything's practical. The education is related to a trade always. So if you feel you learn that way, it definitely could be a good fit for you. And the other question about the chat, how much is the chat room? We put the link there. Peter, we do have a 70% off. Has a free laptop too as well. And everything else that you get in the chat room is like 2, 3, 4 trades a day, or it's like it's a lot more active. So if you are more active, if the newsletters are really not for you because you really want to be like in the moment of the things, the chat room probably be a good fit for you for that type of trader. Right, it's finding what fits you, right? Some people have a full-time job and maybe they can't be in the chat room all day. So even if you just pop in, right? So, maybe the newsletters are a better fit for you, right? So just to keep that in mind. Keith Williams, need to learn how to place my stop loss. I think Nic can show you that pretty easily. And as a matter of fact, there's like videos here. When and how to book profits, lesson breakouts. Okay, your question is, I need to learn how to place your stop loss. Look at this video. What is the title? When to book or set a stop loss. Boom, right there. So you have a full video that Nic made for your specific question, Keith, but I'm sure you're not the only one asking that. I'm sure other people were asking that as well, asking themselves that. So that's good. Jim, what's up, Jim? How we doing, Mr. Jim Cruz? Rodrigo, where do you find that page at? Let me go back here. We're talking about the getting started. Oh, you got it? Okay, cool. You got it, Jim. Winner, yes, you can combine both of them. Don't worry, I can give you a deal if you do. Just contact me, email me. All right, what other questions do we have? Ceci, I'm excited about the videos. I learn a lot from the videos. I do find I have to watch them over and over. I mean, it's pretty normal, right? It's normal to not get it on the first time, guys, right? There's no reason to feel discouraged if you don't get it on the first time. It's normal. It happens to everybody. Don't feel weird. All you have to do is focus, right? Pen and paper, like take it seriously. So, don't try to just keep all this stuff in your head. Put out a notebook dedicated for your learning process. And from there, you take it seriously pretty much. Like this is a career, this is not like you're rolling dices on the street. You're you're an options trader. That's what you want to be. You want to make this a full-time thing and make really good income with it. Well, the least you can do is have a notebook with your notes and take it seriously, right? Put some hours aside and you have a mentor, you have a teacher, you have Nic who is doing it with you, right? In the newsletters, in the chat room, wherever. So he's like your partner, your trading coach, your mentor, your instructor, right? All these videos, and keep in mind, some people ask him questions, and he'll just do other educational videos, and he'll just send them just because, like he'll make a video like on some lesson, and he'll just send it out to all the members. So he's been doing that a lot more. I can tell you, Nic does not. I don't even know when he sleeps because he's there in the chat room pretty damn early, late on the weekends too. So as a trader, I love it, but as a human being, like he's there all day, like nonstop. All right. So just keep that in mind, folks. If you do want that, if you do want that company, if you do want that, some people are very active. So it's a good fit there, right? All right, let's see what other questions we have. Craig, where do I sign up? Let me put the link there, Craig. I don't know what you're trying, which like for the new, I'm posting the link for the newsletters. Okay. Um, it's all labeled there, so you can see what it is. All right. Tazim, you're welcome, man. Okay, JC Ruiz, I already signed up. Good question. All right, we got a good question here from JC. Let's JC says, I already signed up for the option starter. So do I get access to the chat room? No, so the chat room is a separate, it's separate. The chat room is like, everything is standalone, right? So the option starter is a standalone sub, the options enhanced, standalone, options ultimate, standalone. But you have to pretty much like go to the next tier if you do want, to add that. But the link is posted there for you, my friend. Okay. Good session with Nick today. Agree. Mr. Red is asking, do I have to order Benzinga to get access to Nick's chat room? Do you have to order Benzinga? You mean the newsletters? No. Well, I mean, yes, actually, with this checkout, but you can send me an email though, and we can see. All right. Let's a couple other questions here. Well, I mean, Red Rum, we're talking tomorrow, right? So just call me. We're talking tomorrow from what I understand. So you have my number. Okay. Okay. So we got to your question, JC. So they're you can upgrade to the next tier, right? Can we upgrade packages once we're in? So John, good question. Can we upgrade packages once we're in? So once you get the starter, once you complete that checkout, the $7 a month, okay, it's gonna auto refresh. Don't click out of it. It's gonna auto refresh. It's gonna pop. It's just gonna ask a question. Do you want to add, such and such, like an additional trade per week from Nick for $14 a month? That's the enhanced. So you do that. Once you complete that, you just literally click yes, add. It's a blue button. It's gonna refresh, auto refresh there, give it a little time, and the options ultimate will appear. And it's gonna say if you want to add that. So when it's a separate, but it's in the same checkout, guys, right? So yeah, that's how you would go to the next tier, John, right? If you do want more trades, I honestly think that personally, 2 trades a month is not enough for me. Like that's why it's called the starter, right? If you really are like straight up starting, but quite honestly, guys, for $14 a month and the other one 47, like I would totally if I would be you guys, I would just get the whole thing, because for what you're doing monthly, you're getting a lesson on every trade. So every trade, if I'm actually learning, I would look at it as a lesson. I would look at it as, okay, so this is why he's doing it. This is what he's doing. These are the factors that he's taking into consideration when he's trying to set up a trade. And you start learning pen and paper, right? You start taking notes, you start taking it seriously, right? Some people are in this just to learn, not even to trade. So some people are just learning because they haven't gotten approved by their brokerage to trade options. So, and they're getting more complex, now they're making you take quizzes and tests and all this stuff to approve you for options. So if you don't pass that, like you're done, and that's why with, some people just do it. They just come here to learn to learn from Nick on spreads and everything else on the options world. And then they get approved to trade options with their brokerage. So, and it's just going to keep getting tighter, guys, because it is a risk, like to having somebody can blow up their account and like so much more. So yeah, it's really important to know the stuff. It's really important. Mark on the YouTube chat, link to the option ultimate. So once you go through the starter, it'll take you to the next tier. It'll auto refresh. It'll just say, do you want to add the enhanced, right? If you want to add like 1 trade a week for $14, you just click add, and then it'll take you to the ultimate there. It's in that sequential order as well, Mark. Tazim joined the newsletter. Nice. You joined Nick's newsletter? Which one, the The enhanced or which one? Big shout out to Zoom. That's how we do it, brother. Good stuff. Yeah, $7. I mean, why wouldn't you do it? I don't know why someone would say no to like to something like this for $7. It doesn't make sense to me why you can't. For $7, it's really like anybody can join. Like there's no excuse why you're not starting to learn about options for $7 a month. Like honestly. Um, Winner pegs, can you expand on your 7 updated 14? Then what? And then what? Okay. So the checkout like auto refreshes. So once you go to the checkout, you go through the $7 a month, which is the starter. It's going to ask you, give it like a second for it to load and stuff. It's going to ask if you want to add one more trade. It's going to be like a blue button. If you want to add, you'll see it there. Just click yes. It'll take it to the next checkout and so forth. It's all in this it's not a checkout. You just click add pretty much. $7 a month. Yes, $7 a month is 2 trades a month. Okay. The $14 a month is 1 trade a week. All this is from Nic. Okay. These are Nic's trades. He's just sharing them with you guys. He's sharing them with you so that you can trade with him pretty much. And then the ultimate 3 to 5 trades plus bonus content, bonus material, bonus trades and strategies. That is 47 a month. So we've never done the monthly, to be honest. We've never done this. It's an insanely low price. It's really, we're just trying to like give back to you guys pretty much with this. So, because we appreciate you guys being loyal viewers and stuff. So that's why we're doing the special here for the YouTube guys and for the Zoom folks. All right. All right, let's go. A couple more questions here, I think. Okay, Drew. Got it. 4 trades a month. Can't be. Yeah, I mean, it's and it's an education lesson every trade as well. So Benzinga stock newsletters, $47, only 1 time yearly. Okay, guys. So if you do see this add-on, like a green thing that's it's called stocks to watch, you do not need to get that if you want to get to the next tier. That is just an add-on if you want to get it. It's not from Nic. That is from the Benzinga analysts. They're just spotting things in the markets and they just highlight them to you. It's not like it has entries or exits or nothing like that. It's just like, hey, look at this, or hey, we saw this happening, that kind of stuff. In huge volume on XYZ stock, whatever, that kind of stuff. So like little treats. So yeah, you do not need to get that one if you want to go to the enhanced. Tasim, Ceci, yeah, absolutely. So it's totally normal to not get it the first time, Ceci, and trust me, it happens to everybody. I talk to a lot of people. It's pretty normal. But you have to keep trying to get it. Like you actually need to once you understand, what your limitation is, once you reach that moment, then you start moving to more advanced terminologies and advanced concepts in options trading, which is going to make you a well-rounded options trader. If you are just buying calls and buying puts, that is the most primitive, basic way of trading like options, right? So, and most people only experience that, like I'm either up 50, 100, 200%, or I'm down 50, 80% on the whole call. So there's different ways to trade that you don't have such volatility. And that's what Nic does. He's a little bit more on the conservative side. So if you don't know how to do that with options, Nic is your guy. All right. So yeah, Ceci, don't worry. It's happens to everybody. Tasim joined. Cool stuff. How about 4 trades per week? That is the enhanced, Moises. So 4 trades per week. All right. So I haven't even got into the newsletter. I don't think. I think I showed it to you guys. So this page is available to all you guys that join this getting started page. It's like a starter kit. It has everything you need to survive in the options world pretty much, right? I think you should go through every single one of these videos, okay? Each and every one of them. It's going to help you, and you will definitely have a better grasp of things with options. I guarantee you that. So yes, Moises, those are the 4 trades per week, the enhanced. I'm going to show it to you really quick here. So we're going to the enhanced. The enhanced is the $14 a month. Twitter, Nike, and mystery ticker. So let's just click play here for a bit.
Yachts. If I'm long any of these stocks or stocks that look like them, I shouldn't do it. For example, one of them is Twitter. If I'm long Snap, I shouldn't take long Twitter. They kind of trade the same way. Okay, just an example. All right, and so what can happen from here? Every stock I look at, every ticker, including the Nasdaq, looks like it's about to fall apart. Either already have triggered in head and shoulders type of bearish pattern, or is about to. This one, if the QQQ loses this, it's going to come down to here or here. Have I scared you? Comfortable with? Okay, and of course it falls into 31. This trade,
so you see all
the show tremendous.
So Nick is going through the options chain there with you, literally talking about the technicals, about the markets, about everything, literally placing the trade right there, showing you, okay, what he's doing, what he's buying, what he's selling. So this is how every trade idea comes for the newsletters, okay? So I think that Moises, that's like it's kind of what you were asking, right? What's your max plan? I don't know. What do you mean by max plan? Let me know what you mean by that, Moises. Do you mean the ultimate or the chat room? Let me know. Yeah, $7. Yeah, $7 a month is 2 trades per month. $14 is 4 trades a month. And the ultimate 47, right? 47 a month. That one I would say is 15 to 20 picks a month, plus a lot of bonus content strategies, a lot of material that's meant to help you become a sharper trader, and really navigate these markets with options. All right, folks. I think we covered almost all the questions. So max plan do you offer that includes like everything? We don't really offer that. Well, we could work something. I could work something out with you. Depends. I'm not sure if you're trying to ask like, you know, like a lifetime or something like that. I'm not sure really. I don't understand the question too well, but just reach out, Moises, and we can chop it out and see what we can do. Obviously, at the end of the day, for me to feel good, I want to make sure that you are in something that is actually going to help you, that is going to benefit you as a trader, that you're going to have positive results on it, not just on the learning side of things, but also once you apply that knowledge and all that learning, you will be able to become a more profitable, more successful, more consistent trader. That's what you're looking for, consistency when you're trading. All right. Not the crazy volatility. So that's what I would say, guys. I'm going to drop the chat. I'm going to drop the link in the chat one time, and I'm going to gonna work on some emails here from you guys. So, all right, I'm posting the link for the newsletter on the chat, folks. Literally last chance to ask a question before we shut the stream here. I'll leave it running for a bit, but I am going to be doing other stuff, so I won't be checking the questions. So right now is your time to ask that question. All right, folks. Moises, what setting are candlesticks set on? I'm not sure what candle, which ones. I don't know. Oh, this is E-Trade. You're talking about, okay. Yeah, so I'm pretty sure this is Z-Trade, but he doesn't, like, he's only doing it to show you how to do it, not really recommending it or anything like that. Casey is 47 a month on top of the 7. Yeah, everything is separate, but it builds on top. So you just add the next tier pretty much. Yeah, red nose, pretty sure. Thanks a lot, Red, helping out there with the questions. He knows the stuff there. All right. Okay, guys, I'm dropping the info in the chat. Give me a second here so I can take care of this. And then I'll get back to all the other folks that emailed me, and we can touch base there on what's on, on this and how it can be beneficial for you and your style of trading as well. Let me get those links for you guys. Good session though. So thanks for being here. I definitely want to thank you guys ultimately for being loyal to Benzinga, to being loyal here to the family, making sure you're always here. There's a lot of people I recognize all the time. That red guy, red rum. Yeah, you're always here, dude, all day. I think pretty sure I've seen you like in all the shows and stuff. So cool stuff, man. We always appreciate all you loyal fans out there that support Benzinga, that are here watching and learning and participating on these lessons. So thank you guys for being here. Definitely, you guys make all the good things happen here. So all right, so I'm posting my contact as well, guys. If you want to reach out, if you have questions on the chat or the newsletters, whatever it is, let me know. Thanks for being here with us, guys. Shout out, Ceci. Remember, you are the winner. I think you emailed me. I think you're Casey. So you are the winner. I will be emailing you about the prize for participating. So shout out to you. Stay hungry. And folks, join the newsletters. Literally like $7 a month. Like, come on, like what more do you want? Seriously, this is the best time for you to join. And you can even add the other ones there because it's monthly and we really are probably not going to do this again. So if you do get the monthly, you're probably just going to be grandfathered into that because everything else is yearly, folks. All right. Keep that in mind. So thanks for being here, guys. Appreciate it. We love you guys for being here. So we'll see you at the next time. And thanks for joining us.
So tremendous losses. And if I don't panic and close it, then I don't suffer those losses. They simply
Thank you.